My friends, and welcome to the Breakfast Club, Sunday edition of the pre-market analysis. I just want to say thank you very much for all the people who have showed me a little love. Thank you for the concern about the Bell's palsy. It's still active. Face is still kind of paralyzed, but still taking the antivirals and the steroids. So hopefully we can have I'll put my face back together again in the next few weeks to a few months. It can last quite a while. So I hope it takes care of itself. It's got a pretty high cure rate, so it takes time. And we're only on day 4 or 5 or something like that. So if you have to put up with my face today, try not to look at my face too much. Just listen to the analysis. I'm just going to give you some basic analysis of the market. I might go a little bit more in depth this morning as far as I can tell where I think it might be going, or where I'd like to see it go in the next little while. So thanks again for all the love. I appreciate it, you guys, your prayers. It means a lot to me, so thank you. All right. Now let's look at, make sure I've got my speakers turned off here. Now I'm with you. There's 2 of us in here. All right. So one other person. Hello, one other person. Good to see you. 2 people. That's good. Now we're starting to cruise. We're up to 3 people. So welcome, and just give me a little hello on the side there so I know you guys are all good. If you have any questions, by all means, here's your place to ask. I was going to do a Skype session today, but do it more like a private just for the group, but nobody seems to be responding on the Telegram channel, so I think I'll just come on here and give you guys a quick analysis. So what I'm looking for NASDAQ, my concern is that, let's start with a weekly chart here, or a monthly chart. Let's just start with this for a second, and then I'll go back to this one. I just want to show you NQ on the non-contract month. Okay. So we've got this, just this nice little bullish market here for a couple of years now. So what I'd like to see is, now that we've seen this little tiny reversal here on the monthly, not just the fair value gap, it's not show you it's a price and balance there. Volume and lots. Okay. So we have this Bissey inversion here, not volume and balance, it's a Bissey inversion. So we've got this month that we've now dropped, we've created this low, and we've got an order block here. We've traded below it. So what I want to see is, see if we come back to 830 to 25.3, no more than 21.39. I want to see if that holds. I want to see this portion stay open. If we're going to roll over and start coming back down again, and we're coming into this range, first of all, I'll be looking for the first big swing points with the wicks. and we're well into 62%. So we could start to see a reversal back up into here for the seasonal tendency for May, into May, April, May, to see the first month of May hit the high when on a retracement, then go into June, you get a little spike up, and then right down into July, August, we should see another low. So I'm looking at that level above us. I'm looking at this level here, and we have not traded below this order block here. We haven't taken out the swing point here. This last down close candle's wick, if you take the quarters of this, we're not even at 25% of that wick yet. So I'm looking for, see how 50% of it held. We left, so now I want to see if this holds and we start going higher again, or if we continue to eat through this, we're going to take out that 50% range again. Weekly wise, let's look for some overlaps here now. So let me put that monthly back on there again. I'll show this in all the time frames. See how the weekly showed us we dipped below it on the weekly, came back in, perfect hit right here, and then continued to go lower. Mean threshold of this candle here, and the discount array sitting right in here, the discount box. Is my inevitable downside objectives. So if we're looking for this week to continue going lower, I'm looking for it to reach all the way down into 18,696 with stops along the way at roughly, well, that's, I think the midpoint is right there. We've already hit the mean threshold of those two candles. And yes, I take the bodies, not the whole thing. So that's pretty much put us right in at 0.79. So we can see a little pop below here, hit this 0.79 and start to see a retracement. We have taken out the low, we have taken out this low. So the market structure shift in here, inside this range, we're well into 70% of that range. Look at the largest range here. We're right at 62% of this largest range. So if we're going to get a reaction off of this, I want to see us get back through this candle on the weekly, through its mean threshold, which is 847, if we're going to come back higher. But I still want to see a downside objective here hit first. If we do get a retracement this week, I want to see it up into this candle, reverse, and then come back down in here again. Or we just start marching low. I think we're going to get a bit of a wick to get started into Monday, Tuesday. We'll see a wick start up in here. It's non-farm payroll week, so we could have some crazy times happen near the end of the week. And where are we going here? That's weekly right now. It's my weekly objectives, daily objectives. You see the overlaps? Look at the consequent encroachments are overlapping now. I like that one. This is typically what I would have expected from here. Nice. There is where I want to see that just start. You can come down to the rejection block. It's fine. You can come back and fully fill that. Just take out this low with a little pop down. Leave this like relative equal lows and then see a retracement back up into. Here's my levels I'm looking for on the daily. In terms of this higher range, I'm looking for these upside objectives inside this range. So this is a premium. Here's an idea. Let's wait for this commercials to end. This is my concern. But if this is the next price leg lower, we break this down here on a downside and close below it, we're looking for the next price leg down. You're looking for 17,000. So we're going to be dropping almost 5,000 points over the last few months since February, the high in February, and this is going to be a significant drop down. Now if we looked at that monthly again, where does that put us? Right at the bottom of this wick. This larger range here just takes it out. That would be the completion of that particular price leg, and you don't want to see that double again, like 25%, 50%, 75%, because that would be quite a sizable drop. If we came back into here, that would probably be reaching for this order block below us here on the monthly at 14,000, and we don't want that. Let's be like right pre-2024. But one level at a time. If the markets are going to take a big plummet, then I don't want to see us get below this order block here. It would be nasty if we see us take out 16,753 on a close, come back into this order block, and then start really augering down. That would be a nasty drop in the market. So in order for us to bail out of this, we got to stay above a significant structure break back in July of last year. All right. So this is kind of like what I want to look for, right? You know, last year we had a drop down March into April, April into May, and May here, a little dip in May, and then run back up, drop down in July and August. That's typically what you want to see a seasonal tendency do. So this little drop that we're seeing now, I want to see is get no more lower than that. I want to see this and then start to see a retracement back into May, coming at least back into this premium level. And then if it's going to roll over and take out these lows, let that be in July and August. I know it's long term, but I'll put this down here as a potential downside. So what I want to see this week is us, if we just continue to march down, we're heading for 18.7 to 18.883 and around that area, and then see if that holds. If it does hold, then we're looking for a retracement back inside this range, and these are my objectives I'll be aiming for. If we're just inside the small range that we've just created last week from here to here, if we've now dropped below this discount level, if we come back up and tap this, so I'm looking for to see how we open today, if we gap higher, and do we gap up above this level, and then come back into it and start moving higher. This level right where it's just finished today or on Friday, I want to see that hold price now, and then see if we get a kick off of that and a run back into this range. And then I'm looking for a run above the discount, find some support at it, hit this, you know, equilibrium part of the range, and see if we can work our way through the main threshold of this candle, get back up into here before rolling over and coming lower. And if we can get back above that level, then I start to get a little more bullish about returning back into this range. But otherwise, I'm still bearish, significantly bearish. But the first part of the week, my thoughts are we're going to be a little more bullish, at least up into this level. And I'm going to see if that 1940-480 level holds, and that will be my decision based on how we act on the open and Monday. How we close the day on Monday, give me a better idea of where we're going to be headed, whether it's just back inside this range for the week, and then we'll go back into the consolidation area. The fact that we've tipped through here already tells me it wants to come a little lower. So if we just come back, tap this, come back down, and look for the lows. And if we really get some acceleration here, I'm looking for this downside of 18.716 to 18.883. Anybody have any questions so far? No? Oh, just 11 people, eh? So 4-hour chart. All right. I like 4. I like this breaker here. This breaker, they're like right inside that 4 hour as well. So again, get us above the daily. Start to move back into this range. So I'd like to see it just open and start going higher. Even if we gap higher, I just want to see us get through that level there. If we're going to come back into this range, start to get a little play off of here. I take the fib tool from this little high to this low. 50% puts us right above that equilibrium portion that I was talking about in terms of the range. Overall little range, it puts us right there in that equilibrium one. If we can get above that, find some support, then I'm looking for higher. So it's kind of all panning itself up, and 50% from the whole range puts us back into here. 4 hour. There's a little tiny one right up top there as well. We'll keep that in mind. We have one right here. We got some layered 4 hours here. And I'll see the sell side. Where did it close? Okay. Abs, good morning. You're welcome, buddy. You are welcome. I figured I'd do it on here. Save all these different media centers that people have to. Morning, Joey Sixpack. How are you doing, buddy? It saves having to download Zoom and Skype and all that other stuff. And I'm not giving in any big secrets this weekend anyway, so I'm just kind of doing some basic analysis. I was going to do a TIBS review. The TIBS on Friday was just a master class in TIBS. It was crazy trading, crazy fun trading, and it was right on TIBS mastery. If you would have watched my TIBS video, and you used it right near the end of the day on Friday, it was almost humorous. It was perfect. It was so good. Anyway, let's look at. So here's this range I'm looking at here. So basically, it all hinges on how we act on the daily on Monday. Let's see if we can start coming back into this range and using this breaker. See how sensitive we are off this breaker, or if we just find some support. The breaker gives us the 50%. It also gives us 4 hour and the daily, and if you're looking at the dailies here, we have the discount, the pretty close to the equilibrium of the range, and the premium portion of the range. So I would like to see us I'd like to see us get back in here. So everything's going to hinge on this tomorrow or today. See where we open. If we gap down, look for a little pop below the lows and see if we start to come back in and like a turtle soup, come back into this range. Because it's non-farm payroll week, I would imagine they want to try and keep this under control for a bit. So I would imagine I'd want to see this come back into the range anyway. After having a big down week like that, we did not finish. Remember how Michael was talking about if you don't get your TGIF on Friday, And where are we at here? I think it's right here. I think that was the high of the week, 25th. Yeah. So if we do a TGIF Friday, where does that put us? See how that puts us right in that level? That's where I'm looking for, right? So if we get a TGIF now, he says, if you don't get it on Friday, that Mondays, you could see the pullback into the range on a Monday. That would be the wick of the week. So you imagine this being the wick, right? So if we get the wick of the week from here and then the continuation on the downside, that's the Monday retracement, 20 to 25%. Well, let's take each one of those and look at those levels. 20% puts us right on the equal bottoms right here. See that? 20% puts us right there. 25% puts us on the breaker's body. And 30% puts us on this breaker's body. And puts us at 50% of this range here. I'll overlap these so you guys can see them a bit. And you start to look for all these confluences that try to support a level equilibrium of that range. There's 50% from that little swing to this low here. Provided the range doesn't extend any further, if we just stop it on Friday, 50% puts us right back at the bottom or the top of this daily. And it also puts us just above that 30%. Puts us back in this breaker. Right near this breaker's mean threshold, the last up close candles, mean threshold. Just pop above that, keep coming lower. Anyway, that's what I'm looking at there. So this box is typically now, after looking at these confluences, I start to look at that and go, that looks like a great little zone to retrace back into, and we'll see if we can get through that to go higher and get this little consolidation thing started in April. And then I want to see that slowly start to run back up. If we don't take out that, like if we just stop here on the daily and we start to see this as the April, March, April madness, you start to see that it kind of move up into this premium array and then start to march higher. Then I'm looking into May for us to get back up into the premium we mentioned here on the monthly. There's monthly and weekly above us. Okay, so hourly wise, see how there's nothing down here except for right here. You want to see some precision, hey? Let's see where this opens today. So let's see hourly. Duke, good morning. Every hour on Friday was red. Duke, we didn't even go back to test the big hourly fair value. Yes. So it makes you wonder, Duke, right? Are we going to have a retest of that? Just because we finish this way doesn't mean to say that we're not going to start off the week. If we are going to be bullish, that you would anticipate a weekly wick forming around Monday, right? Typically you'd like Monday. So we'd like to see some sort of retracement on, even if we take this small range where we had a slight little retracement there. Where does 50% put us? Right in that 4-hour box again, right? If we drop to, if we just open up here, gap down, and just take out the low from here on Friday, and then start to go higher, like if we just wick down, start to march back up, 50% puts us right dead center in the middle of this 4-hour fair value gap as well. So we have some confluence or an overlap right here on the 4-hour for a return back into this range. If we're going to do the next price leg, we're going to start the next price leg lower. I'd like to see that at least come back into that 50% of that range here, and that 50% puts us right back in line with these old equal lows. This consolidation CAM model 1 entry, if you're into CAM models, for continuation. So you see how you get some confluences that support a level. And I'm just trying to build a narrative based on pure technical, not my personal opinion. When it's my opinion, I'll go, this is what I like to see. But whether or not we get, again, above here, this remains to be seen. We have to get above that on the daily. And there's nothing down here on the hourly that says to me that it would find support at that level anyway. So you'd like to see it just turn and start marching quite quickly through here, because they're all downward candles, like you said, right? So that's all one giant downward candle. So if you are going to see a retracement back inside here, you want to see it right to 50% plus, which is right back into this breaker for a run back higher. I do like the hourly level right here as well. And you kind of build these up, and you'll see a level of sensitivity here you just cannot deny. There. So these are the levels I'm looking for. And you put those on your chart, and then you can you'll see just how sensitive they are. It might look like I'm being a little bit weird here with all these little boxes and stuff, but they all do play an important role in terms of the day, the overall picture of where you want to see things to retrace to before you want to see where I start to go more bullish, where I start to change my mind to more of a bullish stance, and when I really start to see, okay, this could be the run up from April into May now. So I'd expect to see a level of retracement back there from April into May. I don't mind seeing a little pop below here. I don't even mind seeing it come back and just tap the bottom of this sell side liquidity here. Just take that out. We just run straight down tomorrow. I'm cool. Or today, I'm cool with that too. Could run down, take this out, and then start to see this retracement back here. Again, these are very important levels. If I bring this to here, 50% puts me above that level. Now that becomes an important tap. There's a imbalance right here. There's a little SIBI. We get above that on the 50%. Come back, find support at that. That now becomes the inversion, you see. If we just take out the low, just a little tap, leave those relative equal lows on the daily, and we'll come back and get those in July, June, July, whatever. Again, that's with all things being as they typically are. We don't go back even. Could be some kind of Monday or Tuesday high of the week profile. Yeah, exactly. Tag that fair value gap and then take the sell side. If that takes sell side first, then rallies back up off of it, it would probably be bullish. Exactly. Yes, Duke. I agree with you, sir. I do agree with you. My apologies. If Duke is the girl's name, apologies. I just call everybody. sir, ma'am, whatever. You'll state who you are. Otherwise, everybody gets sir, ma'am. So yeah, that's the hourly perspective. I don't think I'm going to go much lower than that right now, but that's what I'd like to see on the. And that, don't forget, this is just the futures. This is not the micro. So there might be some slight discrepancies in the micro or the contract month. This is all done on the futures. That makes sense. Let's look at ES. You guys are, anybody new here trading ES? It's a guy named Okay Duke. You never know nowadays, buddy. We had a lot of SMTs on the 1 minute chart on Friday. Yeah, I'm not a big SMT. I can't really teach you much on SMT, and I really don't use SMT as a principle to trade, because I just stay mostly in one market anyway. ES, let's look at ES on the daily chart here. I'll keep in the contract. So ES on the daily, similar kind of setup. We have taken out this mean threshold right here, though. %50 of this range, the last 3 days of the week. That's obviously gave us the largest part of the range. 50% retracement on that week brings us right back into that equilibrium fair value gap. I was telling you about. We have a discount, equilibrium, and a premium levels, which would be right up here for the premium. It starts right above it to here. So you have discount, equilibrium, and premium arrays, boxes inside that range. So if we get above, if we gap above a mean threshold today, I'd like to see that get used for continuation and leave that little block open, and then continue to move back into this range and start to come back into 50% of that, which is this order block here, and a retap. This is very bearish for me. If we just come back, tap that, roll over, and take out whatever gap we get in here, use the gap to go lower, and then take out the lows, that would be much more bearish for me. And again, if we gap up above and then get above this level here and use the 50% as leverage to take the premium or work into the premium and just start working back and forth in here, we may see just a week of back and forth inside a consolidation. That's what I'm seeing there. Yes. So see how Let's go down to daily here. We'll keep it on the daily level. This is beautiful, man. When you see this range extension like this, see this low get taken out, you see a range extension, you typically want to see, if it's really aggressive, bearishly, you'll see it just tap the low. Like as soon as you see a body take out that low, aggressive is if it taps the low or the body or mean threshold. And then you want to see it just leave and keep going lower, and you wait for your next reversal. So as you see here, body breaks the low, comes back, gives it one little kiss right there. Well, actually, it's just shy of it. It's 50% of this wick here. And then starts going lower. Takes out this on the high. And where does it aim back into? This imbalance. This invariably gets tapped. If you're going to go lower, it taps it. Now, if you go above it, we're looking for a return back into the larger part of the range. If you just come back and tap it, you want to see it snap off of that with some aggression and then start coming lower. So it hits it right here, and now we've created another reversal here on the daily. Yeah, it's a daily candle. No bodies below this level yet. And we have this mean threshold on here as well. So we've just got a couple little wicks down in here. We have tapped this candle's open. I like that. Now I want to see, I definitely want to see a bullishness on Dow Jones. I want to see this come back into this range here. We have the mean threshold of this candle. We haven't had a body trade below it yet, so this could be just one of those nice little bear traps everybody thinks is going to hammer lower, and it reverses on you. Now I'm looking for it to take out this level. If it takes out that level on a close, that little inversion to tell me it's going to start marching higher, that's the level I want to find support at, and we're starting to come higher into that range for Dow Jones. It all kind of hinges off of this mean threshold right now and how we open today. Natural gas. That's a good thing. Natural gas. I think I have natural gas. Yeah, I do over here, so I'll go over that in a minute. Copper's gone above our objective that we're looking for. I don't have much more for copper. I don't know if any of you guys are trading commodities at all. Watch this level here. If we come back up and tap it, you want to see this stay open, this SIBI here. You want to see it stay open, tap and go. I don't want to see that full fill. If it does give a full fill and you close above it, I'm looking for this mean threshold to give way for it to continue going higher and take out those highs. If not, I look to see it retrace off of here, take out these lows and start coming back deeper into this range. I'll be looking for something down here for copper. Yeah, I'll just tap that line there, roll over and come back down. Be nice, but we have not broken a body below here yet, so could go either way. That's the line in the sand, one way or another. I don't want to see a body get above 908, 909. If you're into real estate stuff. That's Canadian real estate. You guys are probably Americans, most of you. So you're not into the Canadian real estate side of things. Yeah, I'd like to see us get back above these highs here. If this is going to be our next price leg higher, I'd like to see us get back above these equal highs here. And there's obviously a big pool of liquidity back up here in February. If we start to leave now, we've got to get back above 25,333 and not use 25,013 as a support to come lower. And if we do if we do start coming lower, I'm looking for right here. That's my downside objective. If that gives way, then we're looking for all this relative equal lows below us here. If we close below that. Natural gas, I've got my upside objective I've had for a few days now, so that's the upside. Looking for it in nat gas. If you guys are into natural gas, gold, I'll get to that one in a second. These real estate REITs, these guys are paying 14% dividends right now. 14% dividends. And they pay every single month. 12 cents every month. They're consistent. Through good times and bad, they pay. So if you want something that's pretty consistent with paying you dividends, American people, this is a government-backed mortgages. So if they default on their mortgage, the government protects them, and it's all retail. Or yeah, retail. It's not commercial. I've been in it for years, and it pays consistently every month. So anyway, I'm not saying you should get in it, but I'm just letting you know we're in a consolidation now. We've come back into a CAM Model 2. I want to see that react off here and come back higher. I'd love to see us start taking out some of this premium stuff down here. It's nice. We've come right back to the top of this order block here. I want to see if we continue pushing higher, or if we start to eat through this down at 9.15, take out some lows here. I'm glad I got out of this thing. Years I sat in this thing. It was just shit. Finally had a little pop-up, gave me some profits, and got out of that thing. I just look at it as a nostalgic thing now. Lambo, happy Sunday. Good morning. Good morning. Sounds great. Thank you, sir. The face is a little paralyzed still, but still get a little weepy on my eye. But that's okay. We'll get there. I'm not too worried. Wheat. So wheat hit the objective we were looking for a while now. So we got the next price leg lower, and we finally took out the lows that we were looking for. We hit that right on Friday or Thursday, I think it was. Thursday we hit the low, and then we popped through it here. That's the all-time low right here, and we popped through that as well. Well, no, we haven't. We're aiming there next. So 526. Let's see if we bounce off of that. And I'm looking for this level. If we're going to come lower, if wheat's going to come lower, which you would imagine that it's not, that if this is a seasonal tendency for things to turn, I don't know what the wheat market's like. I don't follow along with the fundamentals of wheat. Looking at it from a pure technical side of things, we haven't closed below the low. We've just wicked below the low. So we've run out all this liquidity sitting down here for these longs. So if we gather them up now and start to move higher, I want to see us get above 547 on a close, and then start working the 555 to get back up to this premium level again. So that would be my upside objective. Short term, medium term, long term. That could be like 2 days, a week to 2 weeks, up to here with the present candle size we're looking at. Soybeans just sitting in that consolidation, banging around off of our 2 levels right here. And you may not like this analysis, but you cannot deny the level of accuracy you see on these levels and how they support price and how you bang around between them. They are rock solid, and you don't have to believe them, but we use them every day. Still looking for downside sugar. And where are we at with this guy? Coffee. Look at that coffee right inside our box. Right below it, back inside it. Now we're looking for continuation on the downside for coffee to take out the low at 375. Get back into this little discount box. We wanted to look here, and look at that. We nailed that right off of our level here on Wednesday, Wednesday, and then ran right back up above and took out our objective. So works great. Look at that, right to the money. You can't ask for better accuracy than that, man. That's awesome. That's a daily chart. So what I want to see now is to see if we can use this look here level to start looking for the next level above us here. I don't want to see us roll through that. If we roll through that level on a close, if we roll through 203, 275 on a close, then we're looking for a run back into this premium box again, and then start looking for it to run back down below that level. If we get a market structure shift in live cattle, then I'm looking for a run back down into this discount box down here. Obviously, you have premium, we have somewhere around equilibrium, and then we have the discount box down here. So if we get structure break, I'm looking for here. If we get support here, I'm looking for up here. Keep your eyes on the prize. Are all your boxes inversion fair value gaps? Sometimes. Most of the time they're inversion fair value gaps, Joey. In imbalances, I use imbalances. I use gaps. I use volume imbalances, price imbalances, and sometimes breakers. Those are the main ones I use as support or resistance levels, and obviously fair value gaps as well. But usually the premium and discount box that I talk about when I go boxing inside a range, it's the opposite one. So in other words, we see a SIBI on the downside and a BISI on the upside inside a range, and I use the SIBI inversion and the BISI inversion. I do not use the fair value gaps. I use the inversions for boxing. That should clarify that for you. So I look for SIBIs or imbalances on this buy side, and the sell side I look for imbalances on the BISI side. So SIBI, that's a SIBI, sorry. Bullishness on this side, so a BISI on this side, and a civvy on this side. You know, this is more, it's on the bullish side, and this one's on the sell side. I use those, and I use, especially if they're like arrays, like to like. So if we trade through this and it starts to go, I look specifically for very similar arrays. So if it's a BISI on this side, I look for a civvy on that side. If there's a gap on that side, I look for a gap on this side. And that's typically what you'll see for algorithms setting up something on the low side, sets up the similar thing on the upside. It doesn't always happen, but that's the first thing I start to hunt for. It's like, is there a similar one down here? Oh, look, right there. We've got a sell side imbalance and a buy side imbalance. If that imbalance holds price, then I'm looking for it to just continue going higher. And if I use that imbalance as support and we start to break market structure, then I'm aiming for that guy down there. It's complementary one on the opposing side. So to answer your question in a long way, they're not all inversions. Coco, we're still stuck in the middle of it, right? So you've got the SIBI on this side. There's nothing on the buy side here. All you've got is the breaker. And you've got its mean threshold. Its holding price. And then you have a BISI right here. See how we take out this high here? We have a BISI on this side. And now you want to say, I'm aiming for that range from high to this range is low. What little areas do I have inside that range? Let me make this a little bigger for you. You see what it is I'm looking at here. Joey. Oops. So whenever you see these things, and just mark them out on your chart. You don't have to buy it. Any of the crap I'm selling you here. You just have to look it up yourself, and you just backtest this. You'll see. Or pop into our show every day, and you'll see this is what we line up. If you get a high taken, we look for this BISI on this side. As soon as that BISI is taken, look for before the low is taken. So you got to remember, there's several rules that you have to have around this. Once a high is taken, I look for a SIBI, or BISI, sorry. I look for a BISI, and then I say, do we trade below the BISI? Yes. If we can trade back into the BISI before taking the low is my objective. If there's a SIBI in range, I'll aim for the SIBI first, and then I'll pay myself a rejection block and low. And again, small range, I'll make my point. So you see this BISI on this side. We did not trade back into it. What do? It continue to go lower. So if we trade below this one, I look for the next SIBI, which is this guy right here, like to like, and we trade all the way back into it. We hit it, take out the low, and now you look for box to box trading. I look for boxing, which is what we typically call boxing. So you go box to box to box to box. So now you're literally inside this range, collecting from low to high to low to high. Look at the similar levels. So we have consequent encroachment to consequent encroachment, consequent encroachment to consequent encroachment. See how they're similar? When you look at arrays, you're also looking at similar points inside those specific boxes. If you want to get more technical into it, that's when I look for those things, I start to say, what did we just bounce off of? What level is providing support with the bodies or the wicks? What level do I expect to provide a level of support if I'm just in this consolidation here? Consequent encroachment to consequent encroachment. See how they're supporting each other and they're like to like arrays? Does that make sense? So you say, that's just an anomaly there, and that shit doesn't happen all the time. Really? Okay, let's go pick something. I don't give a shit. Let's pick a spot way over here somewhere. Let's just close our eyes and just scan back here. All right, let's start up here. We look for a BISI on one side. Wait for it to trade below it. And you do this every single time, man. I tell you, you'll find some killer things here. So remember, keep an eye on the wicks and the bodies. Body drops below it right here. See that? As soon as you get a new high form, you're always looking right here. as soon as you see this drop below here, you trade back into it right there. See how the bodies are affected? The wicks did a bit of damage, but you put your stop loss above the high. And then we aim for internal range liquidity hunt. So it's a simple little method for managing or to trade internal range liquidity. This is how we trade internal range liquidity every day. So you look for here, we trade back up into this larger range. 50% is here. If you want a premium, you wait for it to get above premium. So you can either skip this here and you go, you know what, inside this larger range I want to hunt for, it's not 50%. I want to buy a premium or sell a premium and buy it back at a discount later. What's down here that supports price? Do I have a SIBI down here? Not another BISI, but do I have another SIBI? If I don't, I'm looking for rejection block and old low. So there's your body trades below it right here. You trade back into it. You have 1, 2, 3 levels of entry. You enter in all those. Or you wait for just to get above 50%. You say, I want to get in there. My stop loss will sit here. And I'll start trading back down to the range. As soon as I get to 50% again, I can move my stop loss to break even. Or wait till you hit 62. Move your stop loss to break even. Pay yourself there. And then as it hits 70%, move your stop loss to 62, pay yourself here, 75, pay yourself, pay yourself, pay yourself, and just keep moving your stop loss down to each subsequent one as it starts to move down. Now, yes, it does go bouncing back and forth and may come down to here, come back up and tap you. Then you're out, you're done. You wait for your next setup to occur. You do the same thing again. I'm not kidding you here, man. This is the same shit over and over, and this is how you hunt internal range liquidity quick and fast. And you want to pay yourself. And you may not like this trading style. That's fine by me. I'm cool with that if you don't. There's 50%. We have the next little reversal right here. Okay. You have a body trades above it right here. We've taken out the lows. If that's your downside objective, you've hit it. You pay yourself at that point, and then you just wait for your next reversal. Or you wait for a body to drop below here and then give you market structure shift, and then you continue going lower. All right, so you have the reversal here, you trade above it, you come back, you tap it, you're below 50%, so your stop loss is sitting down below the mean threshold of this candle. And you go, I'm getting into my trade. As soon as it hits 50%, I take half my trade off and I move it to break even. It hits 62%, I pay myself. Look at that, bing, hits me, pays me there, and I move the rest of my 40% of what's left of my trade to 50%. So I'm guaranteed stress-free trade take. I'm on the wrong side of this. It reverses. It hits the premium array. Look at that. Just that other half of it right there above 50%. Hits 62. Rolls over, comes back, trades back through that level. Remember when I was saying I want to see a range extension? If we trade through it and trade back into it, I'm looking for a range extension now before it takes out the low. I explained that to you over here somewhere. It comes back into it. You trade short there. Your stop loss is sitting above you. And now you see this now becomes an inversion. We traded through it, come back into it. We want to see it leave. If it doesn't, it trades through it again. You go, good, now I want to see it use as an inversion to come lower. So it comes back into it. You short right there. We have range extension, well, almost range extension there. So you're in this and it comes all the way back up, taps it one more time, finally gives you your range extension. This stuff works over and over, you guys. Over and over and over again. You just got to trust it. You're going to see it. You got to practice it. Come in to our show live every morning. You'll see this same setup stuff happening. And I'm showing you some serious gold here. Serious gold. It works beautifully. That was back in the day, cocoa. It's quite a while ago now. Get rid of that. So you see how these levels become important, and we continue. And now when you're down, now that once you've taken out, you've got short on this level, if that's where you pay yourself first there, you go, great. Now I'm trading inside this range. What am I aiming for? Where's my SIBI? I'm looking for a like array to like array. So now I'm using this as an inversion. I want to look for a SIBI down here that supports price. There's my internal range liquidity hunt. for the next range, the next largest range right here. Right there. And we have another one right here. So see how you've run through it? And now I said to you before, like we said right here, if we run through it, look for range extension. We ran through it. We come back, we tap it. Range extension. We have range extension. Where are we headed to? The next SIBI down here. This little fella sitting right there. Oh my goodness, you trade through it. You trade back into it. We have range extension. We're looking for a continuation on the downside. So we continue to run all the way down into our last little fella, which is sitting right in here. And we'll see how accurate this one is. Right here to here. Right there. I'm not making this up. You guys can look for this right here on your charts. And look where we hit. Muck. If you use the body. Sorry, and the highs right there. You're right on it. We've hit there's another one obviously down here that we were looking for. And then all of a sudden we gapped up. Now all of a sudden we go, ooh, now we're above this level. I'm changing directions. I've closed my ranges. I've got some equal lows here. We were looking for it to gun down here. It didn't. It now gapped up above us. Now we've got to change in direction. We're looking for a body to trade above this inversion now. Okay. This inversion right here. As soon as that inversion gets traded above right here, look at this. We tap it and we start coming back into this range. You pull your fib tool and you do your same thing. We look for our like array to like array. Okay, so what's our like array inside this small little range here? If we catch that reversal, and this is a freaking 1 hour chart, you guys, and you're getting a ton of these, and this is fractal. This stuff happens on every freaking chart, every asset class. I'm not giving you something that's specific to NASDAQ. I'm not giving you something that's specific to a 1 hour chart. We're giving you stuff that works on every freaking chart out there. It is algorithmic, and this is algorithmic analysis. Brought to you by Michael and some other extra little things that were taken in here into consideration. But what Michael's taught you, you have more than enough. Why people keep hunting for Michael to give you another piece of gold that you're just going to uncover the markets for you? It's already done. You have everything you need to kill it. Anyway, let's go. We gap up. Remember what I was telling you about? One candle that takes out 1, 2 arrays. You always reach for the second one, not the first one. So we gap up above this one and we keep marching through the second one right here. Body treats above it. Look at this. You wick back into it. You're going long right there at level 1, level 2, level 3, whatever 3 levels you want to look at to trade that. Level 1 gives you an entry. You trade back inside this range. Where's my BISI? Looking for a SIBI on one side and a BISI on the other side. So now there's no BISI here, but there's an imbalance right here. It's a BISI side imbalance, right? It's on the buy side. So you go like this. You go from here to here, and then you pull that over, and we go all the way up inside it, smack it. So you go from box to box, discount to premium. That's boxing. You pay yourself there. I don't know about you guys, but 10,290 to 11,042 is 700 and somewhat handles. I don't know about you guys. Would you like to get 300 in 2 or 3 hours? Like to get 700 handles? The crazy thing is only 12 of you in here are seeing the logic of this. Anyway, that's cocoa. We're in cocoa. Guys, we're in cocoa. We're not in anything else. We're just in freaking cocoa. We're not in NASDAQ or anything else. I'm just showing you how to trade a commodity. How you trade commodities is entirely up to you. Anyway, So you now look for body to break this premium rate for range extension. What I showed you on range extension on the downside, we're looking for the same thing on the upside. So we're looking for this level to get traded above on a close. It does, but it also takes out that high, because that's where our first objective is we're aiming for, rejection block high. If this is that close, you have to decide whether or not you want to trade that. How you trade this is entirely up to you. I'm not here to give you a trading setup, though I have given you huge trading setups here. You decide whether or not that's worth the risk for you. We get a body trade above it. We typically want to see it come back and tap the top of the fair value gap, or wherever the wick is on this last candle. If it comes back and taps just above the consequent encroachment where that wick is sitting, beautiful. Continue, look for your upside objective and hit it. Then, if this one's been cleared out and we've closed above here, I look for this order block right here. If we trade back into that order block, I go long for the next premium array, which is sitting right up here. Like array smuck. I hit the premium, I hit the breaker, I run above it, and I want to see that breaker provide support. It hits support and hits our next premium array, discount to premium. If you're patient enough to say, I want to catch this discount array and I'm going to run all the way up inside, I'm not going to look at this little range. I want to look at that range. That to me is the bigger leg. I'm not really interested in the middle part of it. That's fine. You've gone from 10,300 to 11,000. So it's 1,400 handles in a matter of 1, 2, 3, 4, 5, 6, 7, 8. Your day is done. You've made 1,400 handles. I don't know about you guys. I'd like 1,400 handle day. And it's Coco, guys. It doesn't matter if this is NASDAQ right now. You say, like, oh yeah, but do that on NASDAQ. You do it on any damn chart. Anyway, you get my perspective. That's how I break it down and analyze every inversion, every fair value gap, every price imbalance. Let me answer some questions if someone's having. Happy Sunday, Kit Lambo. Thank you. All of your boxes are inversions. Thank you for doing this, plus praying for you and your medical concerns. Oh, thanks, Joe. Appreciate that. Thank you. Sunday Fun Day show. Yes, indeed, Russell. Are in the house. Russell's in the house. Looks like 2022 model entry. Box to box is the best strategy. Let's do Bitcoin. All right. There is some 2022 strategy, especially something like this when you reverse come back into the fair value gap or into this fair value. Michael uses this side though. I use the BISI side. And I know he has used the BISI side when this doesn't exist, but he typically will go to this side. I'm always going here. I'll always go to the opposite side. He comes here more often. I go here. He goes here when there is no here. When there is no SIBI on this side, he goes to the BISI. Otherwise, he uses the SIBI more often than he uses the BISI, just so you know. Not that it's better, or it's just something I've worked out that works for me. That's all. No one's trying to be better than Michael. Michael is the man. He is the GOAT. Let's do this on oil now. I'll get to Bitcoin if you stick around. I'm going to try and give you a full. My wife's giving me a couple of hours here, so I'm going to utilize it all. So let's use the same thing in oil. Let's go to the daily chart here. Where do I think oil's going to go? Any questions before we get started on oil? we have, I like this immediate rebalance right here. So we also take, who was asking me that? Do you always take fair value gaps? I think it was Joey Sixpack. Joey, are you boxes and versions? No. You use immediate rebalances as well as levels of support. Okay, so look for body breaks above second one. Look for a retracement back into the second one. Continuation on the upside. Look for runs inside here. Look for the premium level above you. Sell side. SIBI imbalances on the SIBI side or on the sell side. Then look for equal ones on the buy side over here. Let me get this right here. Sorry. Oh, my eyes are watering here. I got this light shining in my eye here that's making me so if you're getting in on your little buy side here, pull your fib tool, get to 50%, move your stop loss to half, pay yourself, take half of that trade off. You wait now, you're at break even. And it's important you guys see this. Using this fib technique, I know Michael doesn't teach the fib technique, but I do, and it works freaking gangbusters. It's a key level. So watch here. We'll just assume this is our entry right here. We've gone above, we come back inside, we give it a little kiss, and we go to, as soon as that hits 50% now, I'm looking for, so as soon as it hits 50%, you move your stop loss, which is sitting down here, to break even. Pay yourself half. Now, as soon as it moves from here to, as soon as it moves to 60%, you move to 50%, take another 10% of your trade off and move your stop loss to here. You're all in stress-free. You have no worries now. If it comes back to here again and hits it again, you enter it again. Start the whole trade all over again. Your stop loss is sitting below, just below the mean threshold of this candle because you don't want to see it trade below that on a close. So that's your fail-safe. And if you don't understand fail-safe, I've got a video on fail-safe. It's not a Michael thing. Again, it's just something else I've used to develop a way to save your money, protect your money before your stop loss gets taken. So you hit 62%, you pay yourself there, and you're done. If that would have hit 70, you quickly move your stop loss to here, and you pay yourself another 10%. You're inside that range. Right here, you get to load on again, do the same thing all over again. So we used to call it buffering. You buffer any losses you would have taken here by making money in the right direction. If you're on the wrong direction, if you actually catch the wrong direction here, you've actually paid yourself just for it to turn around and go against you. So it offsets any risks you're taking down here. So anyway, you enter back in here, hit 50%, move to break even, 62%, pay yourself, doesn't come back to 50. Oh, yes, it does. So you hit 62, comes back, takes you out, you miss the rest of that. You're good. Move to the sidelines. You hit your premium array. Now you say to yourself, if it closes above that premium array right here, we're looking for range extension. It literally went poof and did the range extension for you. So you go, if that's my objective, it's already been hit. That one's already been hit. Not much I can do about that now. I have to move to the sidelines and wait for a new reversal. So where is our new reversal? Our new reversal is right here. We gap below it. We gap below it. So we look for, it only takes out one. We're right back inside this range. Where do we come back to? A discount box right here inside this small range. So from here to here, premium level, discount level. We gapped straight down through this. So you don't get an opportunity to get in on this. It goes to the discount, reverses off of that, then goes premium through the discount, extends that little range, We're looking for this range to extend or a run back into this little guy right here, just shy of it. We're inside that little fair value gap, busy on this side. Again, I look for this one. And then we trade back above it on a close. Now I'm looking for another run back into the range. It comes all the way back up to that premium level again, reverses, comes all the way back down, takes out our discount side, trades back up through it again. So now you're back inside this range. So here's where you get consolidations and how you can get, you're looking for range extension and it doesn't give it to you. You literally hit the rejection block and you always tell your MBC, pay yourself at rejection blocks. Trades back through the level and you go, no, we're coming back into this range again. Problem with consolidations is when you keep going through it. You want to see something come back, tap it and leave. And if it trades through it, you go, oh, we're stuck inside this little range. And that's where you see it getting yourself getting beat up. And there's a little tiny one right up in here. And you'll see every time you get to a new little tiny range, you use every little fella right there. You trade above it, order block, back to it, premium level, reverse, come back through the discount level, discount, order block. So you're back and forth between these two. Now you want to see it, it's got to break out of this range, right? This is compression before it finally explodes through and takes out this buy side. We're looking for a range extension above the high. Once it takes out our premium, we start, it runs, you don't even get an opportunity to get in on that. So you wait. You get a reversal here, same kind of thing, all over again, back in oil. This is a daily chart. This isn't one of those cocoa charts. This is a daily chart. Body trades below it. We're looking for range extension. It already extends the range, comes back into it, tap, 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 multiple times, and then just finally breaks down. What have we got down here? We've got this discount box right here. We come into it right there. And then we trade below it. So you go, great, now I'm expecting range to extend. Comes back up to the order block. This little fair value gap here, trades above it. You go, oh, are we going to go higher inside this range? And it trades back through it on the downside. You go, nope, we're looking for a run below the lows. And obviously take out all these lows below us here. So now, where are we at sitting on a daily perspective? We've got a swing. It's a BISI side, not the SIBI side. We do have an immediate rebalance right here. And we have a little tiny, like stretch this out. You'll see it sitting right here. And you'll see why it's an important level. And yes, you have to do this with every single one of your levels. Right there. See how we wait for this SIBI side to form? And we have a body finally breaks it here. And then what do? Comes back. That's a level of precision. If you haven't changed your eye for, you have no idea why it's hit that level. And you got to stretch out your charts and you'll see that level of precision right there. Oops. That's why you use these imbalances and you got to keep your chart stretched out enough. If it was really tight like this, you might miss that. Body breaks above it. If you're patient enough to wait all those days for oil to give you that, you could look at this Michael's one here. He's got his reversal here for a continuation. My one is right here. I'm looking for a body to break that. That gives me confirmation running higher into this range, looking for 50% or more of the range. So you want to get risk-free in this one on a daily chart. I'm going down here. Oops. So if that's your entry here, you're going long. As soon as you hit 50%, stop loss moves to break even plus the cost of your trade. Take half your trade off here. And then as soon as it hits 62% right there, you take off another 10% of your trade and move your stop loss to 50%. And it closes you out on Friday. You're done. That trade, you've paid yourself all the way from that precise level there, all the way up to 62% and closed out here. Zero stress. You've been in that for 3 or 4 days, 4 or 5 days, the whole week. And you're bullish all week. Simple. That's how you check. That's how you trade internal range liquidity, man. Because if this rolls over here now that we've traded above here, I like this level. And this is the candle that I'm interested in. If we're going to go bullish, we need to get above this candle. If we don't, if we roll over here now, you've caught yourself a bull trap. This is called I call it a bull trap. Okay. Again, not a Michaelism, but my idea of people get hooked in this is that we're going higher. You don't know it's going higher until we break that candle. If this rolls over here now and goes, shit, I thought that was going higher for sure. Nope. It did not break this candle here, this breaker that sets up this run to take out these lows. That low, that low, that low. If we don't take that breaker out on the upside and use it for support, then I'm not looking for a premium array, which is sitting up in here on my... So if we're here right now and we're not all back testing this and we're not saying, okay, well, now we've used some great hindsight trading here, Darren. This is all hindsight crap, right? You're just cherry picking. No, I'm not. I'm going candle by candle for you guys. And now we're saying, all right, now where's reality? Where does this put us? If you take everything we've done inside here that showed you amazing accuracy, and we now get to the candle where we're expecting the future, the unseen, to manifest, what makes you think that everything that we're manifesting, or if we understand this well enough and we practice this well enough, what makes you think that this suddenly is going to turn around and make this look like just shit that doesn't work? And we've been doing this for months and months and months. We can do it on a monthly chart, and we can do it years back. It's the same thing. It's the algorithm. What makes you think your accuracy is going to be any less on this side? What becomes less accurate on this side is how often you practice it on this side. Or you get in the charts with us in the morning on a 1 minute chart, because we wait for each candle to paint quicker. So it gives us an idea. So we practice and we get good at our skills of reading the charts on a 1 minute chart or a 15-second chart. You'll see us trading on a 15-second chart because we're trying to trade. We're trying to show you that the algorithm is doing what it's doing. We're expecting it to hit key levels. We're looking for precise levels now. We're not just looking for vague areas anymore. We're looking for precise levels to hit and leave. And when you see it come down into that level, you go, oh, if it comes into that, I'm looking for a reversal there on a 1 minute chart. So I'm looking for this kind of reversal on a 1 minute chart. And then I'm going to take that long from there. And I'm staying in this until I reach my next upside objective, which is the low, the open, the mean threshold, whatever your objective is here. Or if you're boxing, you're looking for there. You're still in this one over the weekend waiting for it to get up here. Be careful though, because that you may not get that. So for you, then you'd have to say, which method am I using to manage this? Am I using the fib tool, run on the range, which I think works awesome? Am I looking for specific order blocks? You better know Michael's material. You better know what an order block and a breaker and all those other things are in order to use that. Or you're using reversal to reversal, your box to box. So if I'm in this one and I want to create a new box, I wait for a reversal to happen. If I see a reversal taken, like this kind of thing, if I see it taken on the downside and trades back into it, I close that short or that long out that I had. And in this case, you've lost quite a lot of handles from there. You wait for your reversal to happen. You go, well, this is an immediate rebalance. If I can trade below that and come back into it, I'm out of that. You'd have to be pretty advanced to look for immediate rebalances and catch them and trust them. If not, you wait for, I trade off on a discount box. I get in on this discount box, and the moment I see a reversal, I'm getting out. You'll ignore that one. Let's say you go here, you go, oh shit, I'm on the wrong side of this. I got in here, I get out right here. As soon as it comes back and taps it, I'm out. So that's what you make, and you miss all of those days. You're in this for another couple of weeks, and then it changes up on you. Then you move to the sidelines and you wait. When you say, oh, now I'm going to go short inside this range because I've got my reversal now. So box to box. If it trades back through that level, I'm looking for it to go higher. Does that make sense? Can people get in on a 1 minute, 30-second, 15-second chart and take it to a higher time frame objective like daily, weekly? Oh, Duke, that's how you do it. That's how you do it, man. If you want to, for example, you want right here, let's just use I'm going to use this as an example, answer your question with not just speculation. Not just speculation. I'm going to show you how to use your higher time frames. When you expect price to come into, let's say we're looking for the 19th of March. We're expecting it to trade back into this level and we want to go higher. Okay. So we're saying as soon as it comes back in here, I'm looking on the 19th of March. I'm looking for a low to form the 19th of March inside this box. So let's go down to a 4-hour chart. 19th of March. 19th of March is right in here. I'm in a 4-hour chart now. 19th of March. I've hit that level. I'm looking for a reversal. I don't have a reversal. Based on what I've told you, you don't have a reversal yet. Your reversal on your 4 hours right here. So you'd have to wait for it to go above here, come back, tap it here, and then you get long. So your 4-hour entry on your daily is right here. And you won't get in on that until 2-3 days later on the 21st, 2 days later. So is there a lower one? Keep an eye on the 19th. Keep an eye on the 19th. 19th is sitting right here. So we have that box we're looking for. Here's the daily. It comes into that box. You go, ooh, this is sweet. If I can trade above this candle, this order block, or break in market structure to the upside, I want to use this upside candle to go higher. That's my entry. Body trades above it. You come back, woohoo, you tap it, off you go. You can get in right there. You say, you know what, Darren, it's still not my busy. Michael's going all over that. Michael catches this one right here and he sees that BISI. He trades back to the BISI side. Remember I telling you, he takes BISI, I take the SIBI. Here's the SIBI. Here's the SIBI. Here's the SIBI. Okay. Michael catches it right here. We pretty much catch it the same spot. Here's my SIBI. Body trades about it. If I can get back into that level, look at that. Right on the money. Hits it and leaves. So remember the 19th on the daily we were looking for? There's your hourly entry right there. Pretty close to where our spot is, but hey, we're not done yet, my friend Duke. Check this out. So keep your eye on that level there on the 19th. Let's get on to a 15-minute chart on the 19th. Now I've got to start doing this. I got to go like that. Go 15 minutes. Or on the 19th. 19th. Oh, look at this 15-minute chart. Look how sexy this is getting there, Duke. Duke, are you watching? My man, watch this. There's a 15-minute chart. Right there. Oh, right there. And right there. Body literally closes on it. Let me show you this. Look at this. We're looking for a reversal. Here's the 15-minute chart. Literally right there. That one closes. Look at the close on this candle right here. Okay. It's 66.47. Where does this candle close? 66.46. One tick below. Opens. You wouldn't have got it. So you'd have to wait for this one to get taken out. So you say, I want to see a market structure shift. Market structure shift comes back in to our breaker. Remember, I was always telling you, always look for this one. If you don't get it, wait for the next one to get taken. That one gets taken on the upside, close. You get to tap it right there. You're long right there. You get a couple of drawdowns, little tiny drawdowns here, but you're long right there. You're that 19th we were looking for. On the daily, we're hitting our level. We're down in a 15-minute chart now. We're looking for that little tap. That's what you get right there. You're long from 66.58. Okay, off of the daily. Now let's go. Screw this. Let's get busy here. Let's get Duke all fired up here, because this is the reality of finding precision entries, my friends. Sorry, where am I at here? 19th. Go to. So we're looking for that discount box. Again, right here is that daily. We're in a 1-minute chart here. Oh, Duke. We're in a 1-minute chart, my friend. We've got our reversal right here Oh, it goes all the way down to here. That's all downside. It's hit that level. Is this the one that we're looking for? Because there was a, I thought we had it. Yeah, it's not that level. It gives us our little imbalance. We're coming down to that midpoint. So you got from here to, where's the immediate rebalance? Right there. That's all downside, down candles here. We have a body run above it, and then we go to take out all of these. Yep. Now, if we get a body above this one, I look at that one. We have a body above this one and this one now. Now I look for these guys. Right over to here. Body trades back up. You trade all the way back in and look where the body respects it. Wicks come down in there. You're entering in 1, 2, or 3 right in there. So now you're down to 66.16 for your entry. 15-second chart. I don't think 15-second chart's going to let me get back that far. But we'll see if we get to the 19th. I don't think it will. Oh, it does. Is that 19th? What date was no, the 23rd is the furthest. The 15-second chart will go. Can I get a 30-second chart? Back there. Oh, yes, we got 30 seconds. So right now, Duke, the best I can give you is a 30-second chart. But trust me, you can find a level of freaking precision that is crazy. Crazy. Okay, here we go. It's a 30-second chart. If you just wait on a 30-second chart for a market structure shift, right here. Okay, so you see a little market structure shift, body trades above it, come back into it, go long right there. Your drawdown for the next 2 minutes will be this, and really that all that is just a return to 50% of this range. 62% right there. Optimum trade entry reversal. And then you're gone from there. And that's all because we're hunting consequent encroachment of that daily. I'm looking for a reversal. Even if you said, I'm going to say, all right, well, if you were hunting for it here, then Darren, you'd look for this. And as soon as the body gets above this, or this, or this, you'd say, I want to go long. So you say, fine, I'll take that long there. You have to put your stop loss down here. Okay? Because if that reverses on you, you go, oh, we're still coming lower. There's your next point. Okay, I'm looking for this reversal. It hit it. Now I'm in it right here. So as soon as it hits that spot number 2, and then spot number 3 is here. So you have 3 different places you're looking for these entries. When you get down to this level, you can see these reversals. And then all of a sudden it finally takes off from there. So when you're scouting on a daily chart and you're looking for my first level, I'm looking for any reversal in here. Then I'm looking for this level. Then I'm looking for this level. All inside that daily inversion. Okay. If I see it, I'm going to take it, and I'm going to trade obviously inside the larger range. I'm looking for a reverse. If it changes up on me, I just say, okay, I'm going to wait. You can still get in and out even inside these little ranges, right? If you say, here's my high here to the low here, you can still say, I don't have to be underwater. Like even here's how accurate this can be, Duke. This will blow your mind. Look for the range that you're in. If this is going to continue going higher, I want to see it eat all the way through that. If it doesn't, I enter in on my trade here. I'm below 50% right here. So body trades above that candle. Look at this. Look at this. Look at this. We have change in direction. So we waited for our first reversal to happen as we come into our daily here on a 30-second chart. And we go, oh, look, we got it right here. I'm going to enter right there with precision at 66.19. Now, stop loss is sitting down here. You enter in there and you start to run. You go, okay, as soon as I hit 50%, I'm paying myself on that range. I'm paying myself there. pay myself, and then I move to stop loss plus the cost of the trade, take half my trade off. Does it hit 62%? No. It comes all the way back and it takes you out at your, oh no, it doesn't take you out. You're still in that trade. And then you say, I'm all the way up to, oh, no, so let me back up because I'm running ahead here. I'm missing important things. So you see it trading back up, you get to 50%, you pay yourself half your trade off here, you move your stop loss to break even. You're risk-free, okay? You're risk-free and you've already paid yourself. And we're looking for that big bomber run for the day, right? Then all of a sudden you see a high taken and you get a reversal happening. You go, ooh, if this changes up and takes out this downside, I'm on the wrong side of this. Same with this one right here. I'm on the wrong side of this. This could keep coming lower. And we're just using the same principles I've taught you so far. BISI side, not the SIBI side. I'm looking for the BISI side. Takes out that side there. Go, okay, I'm on there and I've actually broken the structure to the downside. I am now inside this internal range. Liquidity. I'm inside here and I've got this downside objective here and here. The SIBIs lining up with the BISI on this side. So we traded down, we dropped into the 50%, we came all the way back up. We said, if we break through that, we're looking for this to go higher. It doesn't. Wicks go up. They do a little bit of filling in here. Bodies still respect the premium array. And we trade lower. We trade through that range. We get all the way down into here. See that? Look at that. We hit there and we go, great. Now I want to see that bounce off of there and go higher. If we close above here, I can go higher. It closes below you. Shit, I'm on the wrong side of that again. Trades below, extends the range. We have another little reversal. If we trade above that, we trade into it, we're going long. Inside this range, 50%, 62%, pay yourself. You've paid yourself on the way up. You've paid yourself on the way down. Now you're paying yourself on the way back up again. Still trying to catch that big run up, right? It's come down to our next one. So we're looking for our next reversal. You call it that. And then all of a sudden it goes, shit, if it trades back through that level, we're going to go lower. And look at this. Trades below it. And then what do they say when it trades below it? Trades back into it. We're looking for a range extension. So it trades back into it. All the way back into, we traded above it. So then you think, okay, now we're back inside this range. You're back up to 62%. We're back up into this breaker. And you finally break below it again here, tap it again here, range extension. Then you start all over again and start doing that. So you've paid yourself in and out, in and out, in and out, using the same principle, waiting to try and catch a big ass run for the day. So if we can get back above this level on the daily, you're saying, if I can get back above there, we should be on the run higher. So look, we trade above it. 30-second chart gives you like laser precision. Now you continue going higher for the rest of the day. And is that in line? Sorry, did I do that wrong? Is that in line with a time of day that I expect to see price continue going higher? If you know my TIBs, you were known that's a five turn. So if you use TIBs with this as well, then you'll get some more crazy accuracy. Off grid, good morning. And it never goes against you once in profit. Wow. Crazy, isn't it, Duke? And look at that. There's only 8 people in here to witness that amazing demonstration of how to find accuracy on a 30-second chart with a daily objective. Subscribe. Tune in, man. We do this every morning. We got Abs, we got Labo, we got Hadi, we got Lucas, we got all the boys. We got all the boys in here. They're all doing the same thing. They're seeing some crazy laser accuracy. And sorry, that's oil, Duke. That's just oil. That's just oil. Oh, can we do that on Bitcoin? Can we do it on Bitcoin? He says. We'll get there. Stand by. Let me just remove all these drawings. Any questions with that, Duke? Any questions at all? No? Okay. Bitcoin is awesome. I love trading Bitcoin. Kamau and I were trading it this weekend, having a blast trading Bitcoin. The biggest problem I had with Bitcoin is I put a trade on and left, and it took my profits that I made, but I'll show you the trades I did on Bitcoin this morning or this weekend. That we were doing it yesterday. I love Bitcoin on the weekends. Not that I trade it with live accounts, because I don't. I just trade it with a demo, but the demo is fun to play with. It's just practice. I don't take Bitcoin seriously, but it's still algorithmic. Here's gold. If you're into gold, look at this. That big monster civvy sitting right here. Look at this little civvy right here. Pull the same shit over again, Duke. If you're consistent and you are a staunch believer in the principles, look at this. Look at the strength in in that civvy. Look at how bang on that holds. So as soon as it starts to take out the high, you go, I want to see a market structure shift above this. We run above it, come back, hit it, and off you go. Kill zones are awesome. You practice your kill zones, you understand kill zones, and then go to my tips, and I'll bring a level of accuracy to your kill zones that will blow your mind. Michael didn't teach Tibbs. That's my one, but you watch my Tibbs video, Duke. It'll you thought this stuff was fun? Oh, wait till you see Tibbs. Time in a bottle. I don't know why we gave it time in a bottle as a name, but Tibbs works great for me. So anyway, you see the market structure shift here to the upside with a body close above it, come back, tap it. You're in this for a big monster run higher. It's looking good. We're banging off of the mean threshold of this candle right here on gold. So if gold, now that we're back above this level again, right here, this imbalance, this is the one you go, ooh, if that closes below there, we could be going lower. And you don't want to see it close back above there. It does. So now you're back into, is this mean threshold holding price? Are we going to get it back above this? Use this as support like we did down here. Are we going to get support at that and go higher? Or is this going to roll over here now, take that out? And I want to see market structure shift, get back in below this, into this gap here again, if we're going to go lower. So you got to see this level, hold price on the daily. And it's always in blue, always in blue. And it is called a fair value gap, it's not an inversion. We've gone tap, tap. We've just reclaimed it multiple times. We haven't gone through it, come back into it to go lower. So we want this to become an inversion to go lower. Otherwise, we got consolidation. That's a big gap. Yeah, it is a huge gap. But I'm not interested in that gap until I see something on the higher time frame that supports that as an objective. That makes sense. This is just a company one of our guys brought to us. Another in natural gas. Been calling natural gas. This is natural gas, Duke. Does it work on natural gas? I'm giving it to you in multiple different time frames, multiple different asset classes, and you'll see whether or not this has support or not. We have a change in direction. We have a small little reversal down in here. I'll give you the lowest. You always take the lowest one. Right there. Body trades above it. You come back inside it, find support, and go higher. Inside this range, where's my upside objective? I'm looking for a breaker that takes out these highs first looking for these big breakers, these gaps. That makes this really difficult when you're on a 1 hour chart on this particular one, because it gaps a lot. Same principles though. I'm looking for this gap here, internal range liquidity. There's an immediate rebalance going on right here. So I'd be looking for upside objectives being here. Come back during the week and see if I'm on the money for these guys for the hourly. I'm looking for this guy here as well. I'll take that whole breaker right up to the bottom of that wick. So I'm looking for here, premium rate. Where are you inside your range? Oops. So if you got in here, Duke, right there, and you bought at $20.20, and you're into this 1, 2, 3, 4, 5 hours, and after 5 hours, you take your 20,000, you put 20,000 into that, you take 21,000 out. You've made 5% return on your money in 3 hours, 4 hours. When has the bank ever paid you 5% return on your money in 5 hours? You get 5% a year if you're lucky. The bank says, hey, you did really well. You made 5%, 7%. They always try to give you 7 to 10% would be amazing. I just showed you how you can make 5% in 3 hours. Now, that's not the same in everything, but if you know what you're looking for, and you know you can discipline yourself to pay yourself and go to zero stress, take your trade now and move it up to like just under here if you want, and say, I don't want to see this get taken to the upside, because this now becomes my fail safe. If you understand fail safe, you don't have to worry about pulling your stop loss to break even plus the cost of your trade anymore and take half off. You go straight up to here and you go, I don't want to see that level get taken. If that level gets taken on the downside, I've got the reversal. So I'm already right there. I'll catch this thing for a change in direction and short it if I have to. Right? And keep an eye on these guys here too. And if it keeps going, what's my upside objective? I'm looking for this right here, 62%. Then I'll move my stop loss to 50%, and I'm really guaranteeing some money here. I've taken half my trade off, the other half sitting stress-free. I'm in a trade. How many of you guys can go into trades and be stress-free and not have to worry about any of that stuff? That's how you do it. Anyway, that's sorry, you guys are asking questions here. Sir, I used 2022 model, but sometimes had to wait so long. Is there any way to trade only first hour of the market open? Because I have a university works also. Oh, yes, off grid. You certainly can. If you're only using a 2022 model, on the first hour, go to the between 9 and 10 o'clock New York time. Is that university time? I have university works. Where it is, what times are your university? Give me your best time to trade and I'll tell you what to look for. Or my idea of what you would look for. Give me the 2 times that you're looking for. Don't worry about it, Duke, man. So this stuff, I introduced my trading plan just last year, and there's guys in here just picking it up now. And then when they picked it up, though, I got a guy, Hadi, he picks this stuff up and he kills it. And once he grasps the concept, he's hauling major handles out of the market every day. And there's days he has 100% accuracy, and I'm not kidding you. 100% accuracy. He is so precise, he is so patient, he is so diligent, and he follows the rules. And what I gave you, if you follow those rules, and there's refinements to those rules, and you have to make up your own if you have to. There's small refinements, but I tell you, you are disciplined enough to do this, you'll make money at it. You'll make money at it. So give me your times off grid, and I'll let you know what I think is your best. Give me your times and your asset class that you're in, and I'll show you where's the best time for you to get your trades in before school. And here we are on our illustrious Bitcoin. Let's pick a time frame, Duke. Which time frame do you want? Give me a time frame and then I'll show you the same thing. On NASCRAC? NASCRAC? What the hell's NASCRAC? You want Bitcoin on NASCRAC? Is there a NASCRAC? What the hell are you on NASCRAC for? I don't even see it. I see Kraken. Bitcoin, crypto. On NASCRAC, 1 minute. NASDAQ. No, you want me to do Bitcoin. We'll stick with Bitcoin for a second. Which time frame on Bitcoin? You said Bitcoin was too crazy and all over the place. I'll show you how it works, man. I forget it. I'll give it to you here. I'll give you a 5-minute chart. It's one we haven't done yet. So here's a 5-minute chart. Low taken, looking for a SIBI. We'll just follow the basic rules. Okay? We're just going to follow the basic rules. And you come to our show every day and I can refine your rules to give you a little more precision. Okay? Here's a break in market, here's your reversal. We've taken out a low, so we look for a reversal. And it's 1400 hours. It's the 1250 macro. If you want anything more specific, if you want to get into more details, it's a macro. It's an old low. It's a 1400 on my TIBs, 14. You trade above it. We do not take an old high out. We do hit the premium array from here all the way to here. We hit it, reverse, come all the way back down. Now we touch it with precision. We run through that level. We extend the range. We pull back into this small little range right here. And we look for this premium rate of hold price, which is this guy right here. That would have to come, that would be all this whole damn block all the way down to here. But we're looking at I'm showing you more advanced stuff here now, but you take this big Bissy here and you close it into 50% of the range. So this stuff is something new that you'll go, he's just form fitting shit, but you got to know what, you got to see my show to see what I'm talking about here. That's all I'm interested in. When it comes down, I'm only interested in that portion of that whole Bissy side. And look at the level of accuracy there. Comes down, consequent encroachment, bounces off of it, extends the range. Now, if we trade below this level, I'm looking for this little guy down here. Watch this. It trades below it here. What does it hit? Right there. It hits that level. Bounces off of that. Now I want to see it close above this level right here. That guy right there. I want to see it trade above it. It does. Look at that. Comes back to this consequent encroachment and leaves. Duke, are you seeing this? This is a 5-minute chart on this some crazy ass Bitcoin that makes no sense, right? Bullshit. It's algorithmically driven. It works nicely. It works nicely. We take out an old high. Look at this. Pops above it. Come back. Find a little kiss. Take her off to dinner. You're inside a larger range now. Trade your fib tool, 50%, 62%. Pay yourself on the way up. Wait for the reversal to happen. There's an immediate rebalance. Trades below it, right there. Closes on it, opens on it, and continues coming lower. Inside this range, right back to our discount box. Hits it, extends below it. Now you say, now can we get through this level on a close? It trades back through it, then trades below it, then tracks through it, then comes finally back and taps it right here to come back deeper inside this range. You got to have the discipline to recognize these things when it's on the wrong side. Back and forth, you say range extension, Man, I just want range extension. It doesn't give it to you. It runs back here. We're back inside the range again. Reverse. Now all of a sudden it trades back through this little tiny level right here. Back inside the premium level. Then finally runs out the lows. Back to discount box. Runs through it. Runs back right up through it again. And runs through this one. Look at this order block. Body runs through it. Runs through this one. If it runs through 1, 2, 3, you take the last one. Comes back into it. 4. Runs higher. Extends the range. Reverse. Inside this range, that's 50%. Pull your fib tool on that. You'll see that's 50% of that range. 50% of the range right there. Reverse. Takes out 1, takes out 2. Take the second one. Extends the range. Same thing over and over again. Change in direction. Takes out an old high. Reverse. Trades through it. Takes out a low. Market structure shift. Look for the order block. The breaker. Same rule I've explained to you in all the other charts we've been talking about. Trades through it. Comes back inside the breaker. Okay. Not the 2022 model up here, but this one here. Trades through it, comes back inside the breaker, hits the breaker, range extension. Pays yourself all the way down to box to box. We don't get a box to box. In this case, you just get the breaker to box, the discount box, which is right here. Bang. There to there. Pay yourself. Sorry, right there. You would have been finally caught yourself paid there. Touches the first one. Runs through it, closes below it. What do they say for range extension? Trades through it, comes back into it, and then extends the range. Pays yourself. Where am I aiming for? Next downside box. My next discount over here. Come on, you guys. Is this not sexy or what? Consequent encroachment. Hits the bottom of it perfectly. Hits the consequent encroachment. Back inside this range. Hits the premium. Hits... Cam model 1 entry, trades below this level. Do we come back into this box and trade lower? Nope. We have fair value gap. We don't get above it to go higher. You just come back into consequent encroachment or institutional order flow entry drill for continuation on the downside. Now you've traded above this level right here. We got a reversal. How do we apply this to the future now? It's all fine and dandy, Darren, drawing all this shit in the past, but show me something for the future. So right now, you've closed above on here. We're looking for a run back here above this candle. You're looking for a run back inside this range. I'm looking for that order block back here. There's your first one. Your second one's up here. So I'm looking for an upside run. As soon as you can get through this close on this candle, look for upside run. You can trade all the way back down into the bottom of this here right now. If it closes below that, give this bit of wiggle room in here. You want to see this stay open. Tap that, go, you're back inside that range. Look for 50% of this range, 62% on the way up inside here. Get yourself to stress-free real quick. That's how you trade Bitcoin. Off-grid. Let's do your one off-grid. 9:30 to 11 a.m. Eastern time. Can be in front of the charts, 6:30 p.m. to 1:30 a.m. Well, that's good. That's a nice London range there. Remaining time, other chores and university homework. 9:30 to 11 a.m. And which market do you want to be in? Yeah, you got to extend the references, man. They will pay you dividends. They will pay you very important. They're very important levels. So anyway. Off grid, give me your asset class you want me to, which one do you want to be in front of? 9:30 and 11, and I'll show you where you can go. Okay, I need to extend. Can you look at AYA, gold and silver? AYA. Here's silver. We've been calling silver for a while. Gold. I gave you gold over here already. AYA. Oh, that's a company you mean. Okay, I got you. I got you. Let me go over here and use one of these guys. AYA. AYA. NASDAQ. Okay, I'll be there in a second there. Is this the one you're looking for? Joey Sixpack? Is this the one you're looking for? Yes. Okay, perfect. Okay, so what time frame would you like me to be on? Daily. Okay. Oh, you got yourself a choppy one here. Okay. Let's start building it from this most recent high so you get an idea of how this works, and then we'll bring it right to present time for you. Reversal here, reversal here, reversal. So this is what I do, just kind of map these out right now like this. Just extend them out. Actually take this one here. All right. So reverse. Now you say to yourself, we've gapped below this. If we can come back up, and we're right inside this little guy right here, from here to here. You've traded below it. You've come back up inside it. You've tapped it for a short, so you can go short there. You go, yeah, you know, I'm not convinced that's really doing anything there, and I'm going to wait till I see a market structure shift. Okay, if you see a market structure shift, so if we open below that level so either on a close or an open, and trade back into this candle or this fair value gap, I'm looking for, remember, always I want to see range extension or the lowest down close candle. I want to see that hold support to go lower. So I'm low, I traded below it, I opened below it, came back all the way back up inside that candle, reversed, came back lower. Looking for a nice low, looking for a discount, the discount array inside the first range, inside the second range, inside the second range, all the way up to here. And we have a body that trades all the way through it. You go, holy crap, it just keeps ripping, extends the range even lower. Now we say to ourselves, are we going above and below this thing? So here's where you have to decide whether you want to stay in this or not. So you say, all right, I just need to see it tap this and then come lower. But we've already extended the range. So you say, if we trade through this, we could be coming higher. So it opens, comes back, you go, we're going higher. Then all of a sudden it trades through it and you go, no, we're going to go lower. We're going to go lower. Oh, no, now we're going to go higher. Oh, now we're going to go lower. Okay, this is where you can get beat up when you're sitting inside it consolidate. When it consolidates like that, that's not acting the way you want it to act. Now you may say there's a failure in that problem with that working. That's fine. You may look at that as a failure. I look at that as, if it does trades above it and below it, is this acting the way you want it to act? That is not acting the way you want it to act. So you move to the sidelines and you wait for something that's a clean setup. If you get beat up once and twice, you wait. If it trades through it and trades through it again, you go, this could consolidate here. I am going to wait for a market structure shift. I have to wait for a market structure shift for me to be excited about this. So I'd have to wait for a shift here, or I'd have to wait for a shift here with a body closing above or below it. So you wait, you have a body closed below it. You go, good, now I've got a shift. Now I'm on the downside of that. Now I'm going to wait for the bottom to get taken out. If the bottom gets taken out, I'm looking for a continuation on the downside, but because there's no BISI here or SIBI here, it's I'd be waiting on this one for sure. Reversal here. You start the same thing all over again here. You, if I can get it, and I'm inside this range now, so you trade internal range liquidity. So let's say worst case scenario, you took some losses over here a couple of times, you wait. You see this change in direction, you go, ooh, if that actually gets a body above that, I'd be interested in taking that for a long. So you get an open, you go, ooh, now if it trades back into that, I'm looking for this to continue going to the upside. It trades below it, you go, same kind of thing here. I'm out. I wait for a market structure shift. So you've taken 1, 2, 3 losses. Wait for a market structure shift. It's got to get above here on a body. It does, comes back inside it. Now you can catch it for a long inside that range. Run, run, run. Stop loss is sitting here. Reverse. Comes back up inside. Back down here. You're inside from premium level here. Reverse. Tap it. Discount. Through your discount again. This is a shitty one to be in, man. Here. Body comes back in, you traded below it, above it, you wait for market structure shift, and you get nothing. You keep getting beat up in that one on a daily chart. That's a crappy one. There's that range extension one. Can all the way back up to it, hit it here. I tell you, this one I would have had to have been trading lower time frames in this, because you get your ass handed to you here on a daily chart. If this is acting like this, you say, I got to stay out of this and wait for something clean. Like, that's not clean. That's where you see Michael will wait weeks or months for his setup, right? When you want to see something clean, you want to see, when is it moving cleanly? Let's give you a little better idea anyway. And if this is the only asset you trade, you're going to get frustrated. But see how you traded above it here, market structure shift, you come back into it here. Now we have a clean, it taps the key level and finally leaves. It breaks our upside here, like that, gives it a little kiss and then leaves. Right? Breaks our upside. We wait for the reversal now. So once you've got in, even if you took this here, you said, all right, it's come back to our consolidation CAM Model 2 entry here for continuation on the upside. And let me just wait for this commercial end. Okay. You want to see this continue on the upside. It opens, taps it right there perfectly. It's acting the way you want it to act, run above that high. It opens above it, comes back, gives it a little kiss. That's acting the way you want it to act. Then you come over to here and look where you're sitting right now. You got to go, you know what? I'm going to stay out of this until one of these structures get broken to the upside or downside. I'm not interested in trading that. Okay. If you say, well, it's broken it to the downside, we have range extension now. We have a small little imbalance right here. So you're still hunting this and you're going, I'm looking for anything in here where I can start aiming for these relative equal highs above me now. The lows have been taken out. Equal highs, are they going to gun for those? Well, that's what I'm looking for here. Here's my entry. So then you see an entry here and you go, mean threshold, start paying yourself here. I start paying myself right there, and I move to break even pretty quick. Takes out the highs. You finally go, great. Now, if I see a reversal off of this, now they've taken out those highs. I pay myself. Where is it coming back to? The level you've extended your range on. You say, in order for me to get higher and start reaching for these highs, it's going to take that out on a close. If it doesn't and trades back through that level and it's a mean threshold of this candle, I start to go, I'm not interested in anything that takes out that mean threshold. Trades through it. You're like, I'm on the wrong side of this now. It's going to come lower. It runs right through your discount array. So you've gone from here. You don't get an opportunity to get in on that. And it just keeps running straight from premium all the way down to discount. If it takes out that low again, now we've traded below this level. I'd be looking for where are we at now? Based on what you know of this particular asset, you're in some serious chop here. Then all of a sudden it starts to move a little quicker. I want to see this level provide some support to roll over and start coming lower now. Okay, so I want to see this get tapped. If you want it to act the way you want it to act, it's got to tap that level and come lower and take out this low. If it trades back through this level, you're looking for this up here, this whole level up here. This is the only analysis I can give you on this daily chart right here. We'll call that an inversion. I don't care what you want to call it. There's a gap in there, but you take the whole thing. Okay, don't forget the breaker. But that's the upside premium, and this is the downside discount. So if we come up to here, I want to see this kind of thing happening with your particular asset. From here, if we open, come to here like this, here, and come lower. That's ideally what I'd like to see. Okay, now this can go to here, it can go all the way up to the top of this. You do not want to see it fill this in. You do not want to see it close above this. If it does, then it does this. Bounces off of here, and then you look for this level here. Otherwise, I'm looking for anything in here, here, or here to see this go down, down, down. Now you may see it go it may come to here, bounce up to here, back and forth in here for a little bit, but you want to see it head lower. That's your line in the sand. You do not want to see it close above here. Okay? That's what I want to see. So anywhere from there, there, or there. 3 levels. And you want to see that low get taken, pay yourself at this low, then that low. That's what I see on that one. That's a really choppy kind of one to be in. My goodness. TSX. Yeah, there's other gold assets to be in there, off grid or Joey. So let me go to my buddy off grid here, NASDAQ. You're looking for 9:30 till 11, right? 9:30 to 11. Here's your 9:30 to 11. Let's go from, and you what kind of chart you want to trade on? 1 minute, 5 minute, 15 minute, off grid. Yes, daily heard of interesting analogy of scalping devices aiming for higher targets. That was like it's easier to predict the end of a sentence than the end of a chapter. Well, now you can see, Duke. The chapter seems a lot more predictable now. True. Based on what you've showed you now, you have a better prediction on where a day or a week or a month will go. You get a feeling, because you've read so many books, you start to get a feeling for where you think price is going to go, right? Take my mobile. Megaphone pattern, where is it sweeps liquidity with ways constantly broadening formation. I would have got chopped up in that as well. I wouldn't have traded that. It looked too sloppy. You'd have to get into some lower time frame stuff to trade that. It's broken teeth. Off grid, 1 minute. Okay, 1 minute it shall be, my friend. All right, let's go into your time frame you're looking for. And I'm gonna just pick a random day here. Let's go back to the beginning of the week. 1 minute chart. All right, and let's go to the time frame that you're looking for your setup. Okay, and we'll do it over here. This is how you practice this. You guys can practice your charts like this. What time frame do you want me? 9:30 to 10, right? 9:30 to 11. Okay, here's 9:30. I'll try and keep it right on this 9:30. Right there. Okay, here's our 9:30 candle. Let's treat this like the market's actually playing, and you got from 9:30 on. Okay. We're going to watch these candles as they form, and we're going to predict where we want to see them go. Okay. I've got my levels. You draw them out on your chart. All right, so we've already hit the discount box inside this larger range right here. So for me, questions you have to ask yourself is 9:30. We typically see a turn between 9 and 10. There's always a turn at 9 or 10. Okay. Like 80 to 90% of the time, 9 or 10 o'clock, you'll see a turn, a swing high or a swing low. Don't believe me? Go back in the charts, look for it yourself. You'll see. So we look for this 9:30 seems to have a swing here. So now we're saying to myself, in order for me to get back inside this range, I have to be trading in this discount portion, and I'm aiming for that up there. Okay. There is a small little guy right here. You got to keep these small ones because I don't want to look like an idiot. This is not working out because I missed one of the smallest arrays that I don't want to pay for later. That little guy, keep that little guy in mind right there. But I'm looking for premium discount. Okay, so then you just go one click at a time. We gotta wait. We do not want to see a body get through here. If we see a body close below this, I'm going to use this inversion for range extension, or 50% of the wick. You know, there's more advanced stuff that you learn from Michael, like the quarters of that wick. That I'm just showing you the basic stuff, but you know, hopefully it'll give you the idea. Okay, so now I've got a body has now closed below this level. So I'm interested in price running below this low. Okay, 50% of the wick and the rest of the wick. Find support, and I'm looking to keep coming lower. And it's not till I get back above 50% of this that I start thinking we're going to go higher. Okay. Lower. See how we've come back into it? Now you get short right there. And I told you this on all the other charts. Okay, so we traded below it, come back, find support at it, go short. The moment it takes out your 50%, either pay yourself at the wick and move your stop loss to break even, looking for the wick to go down here. And now you decide where you're going to pay yourself. You may be one of those people that go, I think buying partials is bullshit, right? Wait, you either get it or you don't get it. Okay, well, then we're looking for this little objective down here still. We have more of that to hit, but pay yourself there, move to risk-free. So abs, see how we say I get to risk-free right away? Now you know why. I'm in here with a precise entry, and as soon as it takes 50%, I'm moving to break even and I'm paying myself. It's risk-free. You go, I don't care if this goes back against me. If it hits my objective, great, but I don't care. I'm a risk-free. I'm not sitting here trading with cortisol ripping through my body, risking Bell's palsies and stuff. And I'm just trading risk-free, and I'm just knowing how to quickly manage the market as fast as I can. So my first objective is here. Second objective is here. Third, and then I'll leave a piece on to run for one more down there, like take out low or mean threshold of this candle or something. Oh, look, we've hit our second objective, and now we're looking for our next one. See, our trade's there, and we're only at 935 here already off grid, and you're already at that's 404 all the way down to wherever that one's sitting right now. Let's see where it ends up. Do we get our full objective? I have to wait for that to extend a bit more. So you paid yourself there. Look at this ripping back against you now. We're out of our trade. Done. Discipline. You're out of your trade. You paid yourself. Now are you pissed off because it just came back here and took you out? No, because you paid yourself at 50% low hit our next objective. We got paid 3 times. And all the rest of you are still holding on to that, just got your ass handed to you. Because you got to trade quickly, right? That's a quick internal range liquidity or a range extension. As soon as you get range extension, pay yourself. Get yourself into a stress-free place. Now, if it comes back against you, you don't care. You've got money in your pocket. And that all depends on the leverage you put in there. So if you were in there at 404 and you got out at 86 or 84, there's 20 handles right there in 3 minutes. I don't know about you, 20 handles in 3 minutes, pretty good. All right, so then you wait. Just following our rules. Following our rules. Look how far it came down. Let me get my little button off of there. I think, what's the name showed me this. I think you have to get rid of your button. Oh no, is there a little, was it button? Oh. Lambo showed me this the other day on how to get my button off of here. I think it's plus button. Yes, get my plus button out of there. There you go. See how you give range extension? Pay yourself here. If you can get the bottom, sweet. Who cares? Pay yourself, pay 3 levels of where you pay yourself. Again, you decide the rules where you want to pay yourself. I don't care. There's my new reversal right here. If I can get a body above this, I'm looking for a run back inside this range from high to low. I want to be on the 50% of this side, trading back into here. I want to be in that discount portion. Okay, so we have not got a body, lots of wicks, and I don't like this wicky shit now. Too much wicky stuff. So you wait. Wait for something clean. Wait for price action to give you what you're looking for. There. Now you got a body above that level, and you've already gone through into this next level above us. See how you trade. If we can get above here, we're looking for even higher still. We got this one, and keep your eye on that candle right there. So we've got this little imbalance. If we can trade back into that, we can catch a long, and we do not want to see it close back below there. It does not give us our entry. So what do we say when it takes out the next one? In this candle, you use all 3 of these together. Unfortunately, this one comes all the way back down to here. But I like that candle. I don't want to see the mean threshold of this candle give way. Already took out the highs. Look at that. Creates this reversal and just rips all the way back through us. Right? So if your stop loss was sitting right here, you just got a full rip right through you. You paid yourself. Oh, you didn't get a chance to get in on this. It came all the way back, it tapped you here, and then rip. As soon as it takes out that mean threshold, I'm not interested. It charges all the way through. If it starts to run through your discount, close off your trade before it hits your stop loss. Now, if that ran through super fast and took you out, you're out of your trade. You're done. Now, between 9:30 and 10, you may not want to trade that. That's usually your news events is 8:30, and then between 9:30 and 10 o'clock is your Judas swing of the day. So wait till 10 o'clock for your setup, and I'll show you exactly where you can look for a key setup here. So look for your 950 macro. So it's traded through this level. I'm looking for this box right here. Now that that low has been swung, we do not trade above it. See this one right here? We've got a new low taken. So now I'm interested in this level right here. Follow the rules. You're just paying for new information when something's not working out the way you want it to. Sorry, I already know where it's going now. So we don't get anything here. We wait. We're already above the premium, so you wait. You're not going to pay for a premium to try and sell it at a higher premium. We want discounts, so we want to see price trade back into this so I can trade back up into mean threshold here. I don't have my entry, so you wait. You're in sloppy price action crap, so you wait. You have a little tiny imbalance right here. Body trades below it. You trade back inside it. You may catch that, you may not, because we've taken the highs. So you look for the first reversal, trades into it. Now you may say, I want to go short, and I'm aiming for this discount box here that never got a chance to get in on it. I'm aiming for it there. So any little losses you, or a big loss you took here, if you've got a full stop taken, you're only risking half, 1 or 2% of your thing anyway. So if you did, you're out 2%. You've pretty much made it back right in here from this trade, right there to right there. So 1, 2, 3 ways to scale it out. Now you say, if this trades back into this level, I do not want to see it trade through it. I want to see this range extend now that we've traded below it. I do not want to see it close above there. If it closes above there, I'm looking for another little run back up into this little premium level here. Again, we're inside a range, so you have to trade internal range liquidity. Okay, so it traded above it. So now the question you ask yourself, wait for this commercial. Now the question you want to ask yourself is, am I in the premium level? I got to wait for a discount to sell at a premium, or I got to wait for a premium to sell it at a discount. If I'm internal range liquidity, I don't have my opportunity to get in on this. I'm already above premium. You wait. You do not engage this, so you wait. There's your premium again. Hits it. Now you say, I may go to a box to box. Now I'm looking for here to a return back into this little discount box here, because I'm inside this range now. See how we're compressing? It's getting smaller and smaller. I want to go from premium to discount right down in here. So now I'm looking at this guy right there. And this is what you're doing off grid. You're just looking for this kind of stuff. And unfortunately, you're in a, if you're looking at 9:30 to 10, you're into some pretty choppy shit. But here's your silver bullet entry. 10 o'clock happens now. We've retraced back into here. We've traded above that. If we can get back into, if we can get back into that level, I'm looking for a long, and I'm looking for that premium ray one more time. You don't get a long there. It's just shy of it. It's the premium, so you wait. You wait till you see a clean setup. Wait for a clean setup. So now you're going to wait for market structure shift above or below the market. Or I'm looking for a run below this level, come back, find support to extend the range. That's all I'm looking for. So wait. Still nothing, still choppy, even though it's going higher. Still got, the only thing you can look at here is, no, there's a wick in the way. I'm not going to get into that kind of stuff thinking yet. Just wait. Wait. It's a sloppy, shitty day. You're like, I'm going off to school. It's 10:30. There. Now we finally have a displacement. A body, it breaks above this high and takes out this premium level way up here. Now look at how these levels, these levels give you, look at it. See how we trade through it, below it, into the premium level, or the mean threshold level here. We have a reversal, body trades above it, you come back inside it, which happens to be the premium level. You trade through it, come back into it, range extension. So you could be looking for reverse here, inside this range. Then you say, if I get change in direction above here, you wait all this time to catch this one here for a small little run above that high. Pay yourself there. And now, or you go, I'm entering in here and I want to wait for my, here's another option. I'll wait for my, we're going to trade this to the next reversal. So we'll use a different holding pattern here, okay? Sorry. Are you singing tequila? Yeah, I was. Box to box, stress free is a key. In the fair value gap, doesn't it only close upside 3 times where you see it reached lower? In a fair value gap, doesn't it only close upside 3 times? No. I don't know if there's ever an absolute number of times. I've seen it run through many more times. Hello, Shepard. Good morning. Why selecting some inversion fair value gaps on wicks basis, but some on body basis? I'm always picking the lowest one inside the range, whether it's the imbalance or the SIBI. It's the lowest one I'm looking for. Okay, there you, in more advanced ways of looking at it, and come and check us out in the morning. You'll learn that these other levels become important when you get above them, and they're accessed, they come back tapped, accessed. How the algorithm moves up and down and how they come back and reach for these levels. I just want to try and give you the basic one. So you're looking for the lowest SIBI or imbalance. My jaw, doing lots of talking, my jaw starting to get sore here. So that's why you'll see me pick sometimes a SIBI, sometimes an imbalance, or sometimes both. If they're added together, you have to take them both. You have to take them both. Why selecting? Gotta go, D. Family waiting for me. Thanks for everything. You have a great day, everyone. See you later, Abs. Hey, it's Birdman. Hey, it's Birdman. Duke. Okay, Duke is Birdman. Okay. All right, so let's get back over here. So we've wait for this level right here. That's at 10:30. Body trades above it. You come back inside it on a key level, looking for range extension. If you get from here at 440 and you're aiming for there at 456, you get 16 handles. That may be your day. After taking a couple of hits, getting a couple of longs, offset, break even. Look where you go now. Body trades above this level. So we've finally taken that out. So you'll hear me say this every morning. Oh, you're saying hi to Shepherd/Birdman. Okay, I got you. Every time we take out a high, you'll hear me say this. When I see these ones, you'll hear me vocalize this every single day. And this is an exact example why. And there's just more shit to add to. You have to watch this video a couple of times over. I'm giving you guys a lot of stuff here. So when I see a high taken, and I see a fair value gap form above this high, so right here, that fair value gap forms, we have a BISI occurs above here. I talk about something called a graded response. How the algo responds to this now is very important for me. This first level, right? So ideally, you can see it come down, it opens right here. I want to see it just leave. That's an A+ graded response. It just leaves, doesn't even come back, just leaves. An A level response would be a institutional order flow entry drill. So you see it comes back and it just taps into that fair value gap and goes. It can either tap right on the open and leave, or just swing into it, like the top 25% of that, and leave. That's institutional order flow entry drill for me. I'm long. I'm happy with that. I'm move that stop loss that I had here. As soon as it breaks that high there, I now move my stop loss to the bottom of that, and I say I don't want to see it come back there. I'll let that sucker go from there. A B level or B+ level graded response would be, I don't want to see that consequent encroachment get hit. Okay, or if it does, just tap it and go, or just shy of tapping it and go. I'm happy with those. That's a nice B+ level trade. That's a graded response. If it comes back to this candle's high, that is a B level of response, or a C level response. I like it. It's dropped over the consequent encroachment, and it's just tapping that high. I don't want to see it go any lower than that. Got to go higher. And the last D level line in the sand is, I do not want to see a full close of this gap, this BISI. 75% is all I want to see. That's right to there. I do not want to see it close. Now it can come down and close on it, and you can still take that as a trade. So my stop loss will be sitting just below here. And wicks, if the wicks come all the way down there to do the damage, it's not as strong, it's not as bullish for me as this graded response. So it becomes an E level trade. The moment I see a wick pop through there, I'm out of it. I wait for market structure shift again to the high, and then that's how I get back in it. So that you'll hear me talk about every morning is these graded responses. And that's exactly what I'm looking for here. That would be an A level response right there. Ah, you guys know each other. Excellent, excellent day. Does that make sense? So we're already up to 11:45 is your, and then you're off to school, right? So you see a reversal happening here, and you say, if we get a body trade below this level and we see a reversal here, see how we go down, we close below it, we come back inside it. Now I'm looking for a run inside this range. I'm already beyond 50% of this small little range, and there's only one gap. There's an immediate rebalance, so you're already inside of it right here. So inside that consolidation, I can see trades, but you'd have to be like super laser, know what you're looking for to get it, mean threshold, that kind of stuff. I wouldn't touch that now. So if you're 11 o'clock, you start getting 11 o'clock, we always expect to see a 70 or a 50 to 62% retracement after 11 o'clock on the most recent low before 10:30 or after 10:30. So I'm looking for a response back inside this range here now. So let's look, see if that happens. There you go. It happens inside here. Where does it come back to? A discount range right after 11 o'clock. Okay. And that was, we randomly picked that. I didn't know it was going to go there, but that's what you typically look for at 11 o'clock. So if you're trading from 9:30 to 11 o'clock, that's what I'm looking for. And unfortunately, you're really trading from 10 o'clock to 11 o'clock. That's really your best opportunity. Remember I was telling you about 9-10 turn? There's your 9-10 turn. All the way up to 10 o'clock, then 11 o'clock changes direction. Then you'll have another one at 12. Does that help you off grid? Are you still here? And you see how that, as soon as we get market structure shift to the downside after 11 o'clock, then look for 50 to 62% of the range that was created from the 9:30 open or the low. And you typically look for this for, so there's 50% right here. We look for, here's our fair value gap. If we get taken on the downside, we look for range extension. That's the rule, one of the basic rules, basic tenets of what we're looking for. Okay, so we have right on here, we open, come back inside it, trade lower, extend the range, come back inside. We don't want to see a body get above that level. It holds, range extension, drops down below you. Now you think here, if we trade above that on a high, we're inside this range. We traded above it right here. You go long inside this range. This is a trade inside this small range here. You capitalize right there on the bottom of that and run back up into that candle's low, mean threshold or consequent encroachment of the wick, open, mean threshold, and then the high. So even inside there's trades, but you got to know what you're looking for in there. Anyway, still doesn't trade above that level, rolls over, it comes down. And where does it aim for? 50% of our trade. Let's go all the way over here. You'll see it. 50%. After 11 o'clock, look for a retracement back on your range to 50 to 62%. And then you looking for, are we going to continue going higher? If we're going to go higher, I'm looking for market structure shift. I'm looking for reversals, or I'm looking for continuation on the downside still. Okay, so now let's start moving this along. See how we did not break that premium arrays high for range extension? You just came back up in from this one right here, traded above it, and you're already up in the premium level already inside that range, so I wouldn't take it. You got to wait for market structure shift when you're above premium. Trades back below it right here, trades back into it right here, and then looking for range extension. Look for this one to trade above. It doesn't. We're looking for 62% now. Right here. Small little market structure shift. Trades back into it. Range extension. Premium array. Discount. Premium. Pay yourself. Inside that range. If it breaks above here, comes back and taps this, you can get higher. Okay. right there. Trades above it, comes back into it, you can get yourself higher. Exactly what I said before it happened, before we saw it right there. And the higher you go, pay yourself at the high. There's a new reversal, trade below it, come back inside this order block, look for continuation on the downside. Inside this small range, you're already over 50% already. So if you haven't taken your trade from here and paid yourself inside that one wick, inside that small range there, there's probably premium there to discount there. Again, you got to be really disciplined to pull your fib tool on whatever little tiny range you are in. Okay, there's 50%. You get yourself a short right there. You're below 50%, pay yourself. And if you're wrong, it comes back, takes you out. That's being internal. That's trading internal range, not that whole range, the swing to swing. I've been targeting imbalances and liquidity, but I'll get reversals against me before they hit, because the things like on a Friday where we had the SMT on the 1 minute and I was targeting lunch highs. Okay, so you're doing what a lot of people will typically do and get frustrated if we go into consolidation. You can see how what I'm giving you here is very, very precise, small internal ranges. And I'm hunting for specific levels inside very small ranges. And this is a 1 minute chart. So I'm doing the same thing on, like I showed you, on a daily chart. Nothing's really changed, but I've got to be disciplined to trade this. So if you're on a 1 minute chart and you're aiming for old days highs, you're trading a 1 minute chart and missing so many arrays for it to turn around on you, and so many opportunities to show you it's changed direction. It's not going to reach your objective. So if you're looking for so you have to trade on your higher time frame, the one that you're on. If that's the level you want to trade on, look for your entry points, like I showed you on the daily and how we zeroed in on a 15 or 30-second chart for your entry for that daily reversal. Once you have that daily spot you're looking for your reversal, you get in on it. You now go back to the higher time frame and manage it on the higher time frame, or do another 2 time frames above. So in other words, if you're on a 1 minute, you found your entry, manage it on a 15 minute if you're aiming for a daily chart, or manage it on an hourly chart. Now, because you're going to get beat up in here so many times going back and forth, you're going to miss so many times. You're aiming for too many PD arrays away. You've got to correlate your higher time frame objective I'm looking to get in on, and then zero in on your lower time frame to enter in on it. Then you have to say, how do I manage this? Because you see how this keeps changing direction on us over and over again, and you're trying to get your daily chart to like you're trying to go long on your daily chart, and all of a sudden it reverses on you. You're like, oh, I'm out, I'm in, I'm out, I'm in, I'm out. Well, what was your daily objective? If that was your time of day, you're expecting it to turn, you entered in on that. Make your trade, move your stop. As soon as it takes out that high, move yourself to break even, walk away from your charts, put your daily objective up there and walk away and leave it. And as soon as it breaks even, it either panned out or it didn't pan out, walk away. Because if you stay in these lower time frames like this, you're going to have a headache chasing this, trying to stay on the horse. We're in the horse. I want to literally show you guys how to stay on every freaking candle with a level of precision that is unbelievable. I want to show you that, because once you understand it on a 1 minute chart, you'll better be able to understand and apply your trade setups on the higher time frames. Because this is the whole exercise on the Breakfast Club, is just to practice reading price action with a level of precision that is just undeniable. It's undeniable. That's all I'm trying to show you guys in the morning. And if that helps you refine your tool, your setup, I'm happy. If you want to use my setup, that's fine, but use yours. I just want you to study price action at this kind of level. where you see a level of precision that's, as I've showed you all morning here, is not, you can't deny it. You can't deny the accuracy you're seeing here. And if you're still getting mixed up as to what and how to apply it, ask. Come in the mornings. I'm happy to share this stuff with you every morning. Was thinking we'd get a short-term reversal, but never made it to the liquidity target. Again, what was your liquidity target? What time frame you want, and what time frame do you move to and get frustrated on to not accomplish your target? Okay, give me an example, Duke, and I'll show you why it failed and where it failed and why you need to work on a specific time frame to reduce your frustration. Love this hindsight analysis, Darren. Very helpful. I have trouble focusing during your live sessions as I'm trading parallelly. This is so good. Thank you. Oh, you're very welcome, Mags. You're very, very welcome. It's hard when someone's talking in your ear and it's definitely not the same trading style that you have. And if you've got a trading method and you come into the channel in the morning, I can see how that would be frustrating for you, Max, because you say, I'm looking at this and I hear him saying it's changing direction. I'm expecting to go here and he's saying it's going in a different direction. I'm only saying it's going in a different direction inside a small little range. So when you're hearing that, you're hearing contradiction to what you want. Then all of a sudden it starts to move in your direction. You go, damn it, I knew I was right. Why was I listening to him? Because look at the time frame I'm on. I'm in those tight ranges. That's why you may hear something that contradicts what you're thinking and it will throw you right off. So there's advantages and disadvantages to tuning in the morning and hearing me natter on in the background. All you hear me is saying something that contradicts what you want. Then you're going to start second guessing yourself, or you'll just start thinking that I'm full of shit and things just, and I'd rather have you believe that than second guessing yourself. I don't want you doubting yourself, but that's probably where you're getting the frustration, Mags. Yeah, I spend a lot of time on a 1 minute chart. Good. Look at Friday on the 1 minute chart and you'll probably see what I was looking at. Friday. Friday was a beautiful day for tips, man. It was just unbelievable. I loved it. It was just killer. What are you looking at? Explain to me what you were looking at there, Duke, and I'll show you where things started going apart. Hey, Duke, good to see you in here. Yes, true, but I've been following you for a while. I kind of get your style, and I'm learning so much. Oh, good. Hopefully it helps. Not trying to look for signals, but seeing it in the live executions and the logic as it proceeds helps a lot, since the candles are still printing and you can see where the stop losses and targets are. Yeah, it's better when it's trading live. You can really see the dynamics of the candles, because this really is I call it the psychology candle. It's the one that's going to frick with your head. When it's forming, you've got to make your decision. Like we just did here when we're doing this, I make my decision on the close of that candle. And then I go, next, what's next? I make my decision on the close of that candle. Next, that's how you got to treat it. But when it's going, it's going back and forth, that's the psychology candle. That's the one that's fucking with your head. It's going, oh, it's going to reach for my objective. Oh, no, it's not. Oh, it's coming back against me. Oh, that's the psychology. Ignore it till it ends. Then you decide, make your decision. All this stuff we put here, it's been at the end of a decision, right? None of that stuff was while it was forming. So ignore what's happening. Wait till it's finished. Let it do its thing. Screw around with people while you make your decision right at the end of that. Make your decision there, because the split second, the next minute of the next candle will determine whether or not you'll come back and tap it. Good. Now you can get long or short or whatever. Don't make your decision while the candle's forming. That's my advice. Stay out of the psychology candle. It's the candle that is, it's like Chinese water torture. It's tapping water on your head. It's going to drive you nuts. You wait for it to finish. and the timing. I've been incorporating box to box as well. Not really there. Still need so much more practice. The box to box is something you really have to trust, but believe me, it is gold. Boxing is gold. And the best thing about it is that it's on every asset class. It is a reproducible technique on all time frames, all asset classes. That's why it tells me it's algorithmic, because I can do it on any asset class you give me, and I give you all of these assets every day, and I give you the same kind of setup every day, any time frame. So I know I've got something that is algorithmic. And that's, you'll hear me say that in the past. If anybody gives you something, they say, "Oh, I've got this. This is 100% guarantee. This is a killer trade setup. It works all the time. You know, it's got a 90% accuracy." You know what? If you cannot reproduce it on every time frame and in every asset class, don't do it. Don't buy it. Don't waste your money. Don't put your money at risk. I call bullshit. My TIBs, I have designed TIBs around every asset class, every time. You can put on any time frame. It works on everything. That's why I know I've discovered something that is specific to time. When Michael talks about time and price, I've zeroed in on time for you. Down to the second if you want it. Anyway, look at the video, you'll see. Try it out. And then I'll show you how to apply it. I was seeing a market model long. He talks us through the trades. Great stuff after we broke over the initial ITH. Sorry, what's ITH again? The initial intermediate term high. Oh yeah, definitely can relate to the psych candle. We gets to like 1 pip of your target, but doesn't want to take it. It's true. It's true. Oh, by the way, Darren, I'm still trying to join your Telegram channel, but the link still doesn't work. There's something on your end then, Mags. I don't know where you're from. You might have a government restriction on Telegram. I don't know where you're from, but I even went to the Telegram channel to my own link, and I copied that link and I sent it to you. And if that still doesn't work, man, I have no idea why you can't get in there. Everybody else seems to get in. I have people join in all the time. So yeah, you might want to check with your security features on your computer. I don't know. I couldn't give you a reason why you can't get in there, but I've sent you the link directly from because I'm the owner of the channel. I've sent the link drawing you in specifically from that. So I don't know why it's not letting you in. Intermediate term high, yeah. And it's a shame because we do some awesome trades. Like I was on there with Kamal trading Bitcoin yesterday, and we were having a grand old time. A grand old time. I can't detect message. I can't detect message you on Telegram. You might have to go to at ThetaWave Trader, I think it is. At ThetaWave Trader. Let me see what it is here. Dark Eternal just joined our group. Gonna welcome them. Yeah, you gotta type it in as either at Darren Hancock ICT Hypno 99DH. That you'd have to send me a direct message, or let me know that you're in there, Dal. Then I can, once I direct message you, then you have you can direct message me after that all the time. I just try not to get too many people. I get lots of the fake advertisers try to connect with me all the time. So if you're on there, get on the channel and then I'll DM you and we can chat one-on-one after the fact. Yeah, keep trying, Mags, because I'd love to have you on there. By the way, I'm Maggie and I'm from India. Oh, Maggie! Oh, great. I love having women in here. It's great to see the ladies getting into doing some serious trading. Welcome, Mags from India. I'm happy to have you, my dear. Thank you. Thank you for coming. And yeah, India might have a restriction on access to Telegram. You might want to check into that. Yeah, I see your direct message there, Del. The link worked for me. Duke had to try 2 times, though. It gives me an open to voice chat, but I can't message you. Oh, there you go. There's Del. Here, I bet you can chat with me right now. Stand by. Del. Let's go, Del. Send a message. There you go. Now check it. I bet you can get me now. Dark Eternal. Hiya. Duke. It's Duke. Excellent. You have many names. Duke is a man of mystery. You should be able to get me now there, Dal. Just double check your messages. I DM'd you, so you should be able to get me now. Thank you so much. You'll need a VP. A VP. The link opens, but then says link expired. I'm part of many channels, including Michael's, so guess there's no restriction, but I'll figure something out. Really? It's definitely not expired. Let me just do this. Let me do this. This is fresh, right off the presses here, Mags. There you go. That's hot off the press. That's as hot and fresh as I can give it to you, my dear. That's right out of the oven. Let's duke it out. Debt Wolf, thank you. I joined from India with no problem. Off grid. Okay. Mags, don't tell me you're like 13 and you're investing and your parents have restrictions on your your access to Telegram. You might have parental controls. I don't know how old you are. And if you're a kid, you shouldn't be investing just yet. I wish, she says. You're probably like 13 years old. You're taking all your allowance and you're trading in the markets. Maybe your parents have snuck into your house. They've come over you're like in your 40s or something like that, and your parents come home and go, I don't like you on that telegram. And then your dad's gone in and put parental controls on your computer. Oh, so you're able to use Telegram in your country then. That's odd. The link worked for me, Duke. Oh, how I wish I was 13. Yeah, me too. All over again. Man, if you could just hold what you know now, hey? Go back to when you were 13. I wouldn't take stuff so seriously. If you knew in the end just that it would all work out. Yeah, can you imagine? You'd be like to your parents, you'd be like, you get to bed. You're like, you guys get to bed. I'm the one paying the mortgage here. You get to bed. It's like those kids that make $1 million playing video games online. It's crazy. Anyway, if you like this stuff, hit the like button. Give me the thumbs up. I know there's not many of you in here, but I appreciate them any way I can get them. And you can subscribe if you're new to our channel. I'm happy to have you. We're a very happy community. We love to love and take care of everybody, and we're just here trying to move the markets along and, you know, help you guys get better at your trading. And we just got some really, really great people that they just want to share, they want to learn, they want to expand, they want to grow. They laugh, they have a good time in there. They get cliquey, and they've got a little group of people that love doing a little trading, and they trade together, and they all high five themselves and stuff. I love seeing that. So you build some good relationships in here with like-minded people that use ICT concepts and use ICT principles, and that's what we're at. ICT gave us some amazing stuff, and if you can join me with the level of accuracy that I can show you, it's stunning kind of levels of accuracy you're going to see in here. Trade below it, come back into it, range extend. Ooh, look at that. There's nothing down in here. You see that? When you have this discount box right here, this is the very last one. See that little imbalance right there? How many of you guys were looking at this level and say, cut through all of these candles and look at that little piece right there? And then when you draw that little piece out, right there, look at it. Look how many times it taps it and then finally leaves to range extend. Crazy, because that's the only one in there that looks like it's worth anything. And then literally below, come back, give it a kiss right there off that breaker. Extend. We do not trade above. We do not trade above. We do not trade above or above. So if you got short off of there and you wait for your first, and you're trading this on the way down, you go, I'm trading this until I get the next reversal. Okay, so you got short right there at 4:55. This is at the end of the day, 4 o'clock. You're short, you're aiming for there. You pay yourself at that one, and you wait for your first reversal. Right here, you might have got it right there. You said, oh, that traded above. As soon as it trades back into it, I'm out. It trades below it right there. And you go, oh, if it comes back and taps it, I'm looking for range extension. And the range extends. Even that last few minutes of the trade day, the algorithm still spooled and gave you an extension. I want to zoom into that so you guys can see that this is a level of crazy. It's still spooling. It's still spooling. Right there. See how the body trades below it, comes back up, trades through it, comes back, taps the consequent encroachment of it, range extension, and it continues. And then we still don't have a reversal yet. So we're still looking for downside. So where we gap up today is important. That's why you heard me start off the show today talking about where it gaps today is important, because we're looking at the higher time frame, getting a good idea of where we want to look for our markets to move. We're looking at the end of the chapter before the chapter is written, my friends. Before the chapter is written. I've done a bunch of odd jobs and shoved all my money into QQQ once I was 18, then flipped it all into Bitcoin in 2019. If I could go back and trade highlighted capital, oh my goodness. If I could buy 1,000 Bitcoins when it was 12 cents, and you just tell these kids, hey, look, I'll give you $1 when it was 12 cents. I'll give you $1 for every Bitcoin you can mine for me. And these kids go, $1? Are you crazy? Sure. That's like 100%. I'll do that. And they just mine all these things out for you. You get 1,000 of them trading at $100,000 a Bitcoin. You are worth $10 billion. $10 billion. Or $100 billion. Nope, $10 billion, $100 billion, 1,000. Yeah, that's $10 billion. Then you go back, you find that kid who mined it for you, and you give him $1 billion. You don't take advantage of them. You go back and say, remember when I paid you $1 for them things when you were mining them for me? Here, you're a billionaire now. Have a nice day. Walk away. Wouldn't that be awesome? I'd love to do that for somebody. Say, no, I didn't take advantage of you, but here you go. I paid you well, and now I'm going to pay you again because you changed my life. You did all that work. Because who needs $1 billion? Who needs $100 billion? Nobody needs that kind of money. Do something good with it. I think ICT is trading like John Forbes Nash was in economics. Right up to schizophrenia. There's a fine line between genius and instability, and some people are like the candles that wick on both ends of it. Yeah. True. I'd sell it all over the counter to Michael Sayer if my cost basis was in the pennies, and keep 20 coins for prosperity. Yep. I tell you, there's if you could only do that, even looking at look at this one here. We're just going to play here now just because I've got some time. So watch this. If you had this account, look at this. Monster energy drink when it first started coming out. Look at this, down at $2. So let's go. If you knew back then what I'm showing you now, let's just go back to Monster energy drinks. If you use what I taught you today. So back in 2009, you go, oh, look at that, man. It was up to $5. Man, I'd love to get that. Look at these energy drinks, $1.72 now. You think, oh, Lord, this would be so cool if we could get in on this. So let's just wait for market structure shift. If we can just get above here, this big fair value gap here, let's see if we can use that. We'll just show you that was the algorithm actually working back in 2009 as well. Does this shit actually work? So you think, okay, so now as soon as we trade above, oh no, we're going to say, we can say this one or this premium level right here. Okay, so we'll put them both in there as premium and discounts. Right there. So here's the first one. You go, we're looking for range extension if we close above the premium of this range. There, we closed above the premium. We came back. Look at that preset. Let me zoom in on this so you guys can see. Back in 2011, it comes back. You say, holy crap, I'm buying Monster energy drinks at $5 because I think we're going to take out this old high here at 570. I'm going to make 10% on my money. It runs above, comes back. What does it hit? Look at this. Remember what I was saying to you, I want to see a fair value gap form above this old high. Right there, little tiny one. And you say, remember the graded response. Institutional order flow entry drill, I want to see either A, it just take off. So here's an A plus one, it just takes off. Comes all the way back down and just taps right on the bottom of it. Leaves it open. What a beautiful entry. Look at that for a long. And off you go. You say, I'm going to wait. I see this right here. If as long as our body does not trade below that level, I'm looking for continuation on the upside. It can wick all the way down and tag that. I'm all right with that. As long as it does not trade a body below that level. Wick comes down, gives you a chance to get in. And you go, now I want to see a market structure shift above here. Trades above it, comes back in, right in here. Look at that. Right in there. Range extension, pay yourself. Comes all the way back down. As long as it doesn't take out a body, or this body here, which is your breaker on the downside, you're still positive. Look at that. And then all of a sudden it does a little reversal on it. Right here. Reverse, and you don't get an opportunity to get in. You go, ooh, as long as it doesn't take out this low, it does take out that low, and it takes out this low. So it trades back into it. Now we're looking for continuation on the downside, and it keeps coming lower. Inside this range, we're looking for 50% of this range here. It trades all the way down into that breaker. You go, I do not want to see it break through here. If it does, I want to see it come back into, there's an imbalance here. There's a small imbalance here. It tapped right on the bottom of that low. Reversed, came all the way through here. So look for our next one. You're like, man, this Monster Energy drink's really starting to take off here. And this is a weekly chart. It's a weekly chart. We finally trade above it. You tap it. You're going to go inside this range here now. And we're looking for that little spot way up there, right? $8, you're going to unload it at 12 bucks. That week, it just took off. And you go, ooh, if it can come back into this old high here, I'd love it. Or if it gives me an institutional order flow entry drill, I would take that as a long. Remember what we were talking about over here? Same thing happens here. We have a fair value gap. Come give it a kiss and get out of Dodge. And you just caught yourself a Monster Energy launch. And look where it's sitting now, $57. That's 100 times 100. No, not 100%. That's 1,000% return on your money. 100 times. No, 1,000%. Whatever. It's a lot. You can see how our level is. It's the same game, man. It's the same game. And you can catch reversals back into ranges. Look for a reversal here. Inside this range. 50% of this range. You can just turn internal range liquidity hunting just inside this here. So here's the reverse. You don't catch it there. It takes off. Please look for this order block here. Body trades above. It's still literally opens and closes on it again. Tell me why these levels are so freaking sensitive. I tell you, not only is that fair value gap important, you look for, you say, okay, well, if I don't get a chance to get in on that here, and it literally opened just below it, so you still don't get a chance to get in on it, you look for this order block. As soon as the body trades above it, right there, it closes there, taps it here, look for range extension, pay yourself there, look for 50, 62%, pay yourself, and as soon as it comes back to 50%, you're out of the trade. You have a new reversal. If we trade below that level, right there, come back, tap it. Now you're short inside this range. Where are we headed for? Look at this. This is Monster Energy drinks, you guys. Look, 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 look. Look at that. We're box to box trading. Look at this guy that never got hit before. What's it doing? Oh, sorry, let me get that out of the way. Remember the one we didn't get? We didn't catch this one. Remember I said it would come back and get it? Box to box. Look at that. Trade through it. Now where am I aiming for? 1, 2, 3. 3 weeks later, you went from $29 short to $25. You got 20% in 3 weeks off your money. And then you say, if we hit this level, I'm going to go long, long, and long. Remember the 3 levels I gave you inside here? Back up into, ooh, look, premium box, box to box to box. Now, if it trades through it, I want to see range extension, right? Watch. Trades through it. Does not extend the range just yet. Comes back up to it. Pops down. Comes up, taps it. And still doesn't give you a range extension. He's saying, if it trades back through this new level now, I'm on the wrong side of this. It trades through it. I'm on the wrong side. It's coming back into this range and aiming for our premium array because there's nothing in here. There's nothing in here. So you have to rely on the next one above you. If we trade through that, I want to see range extension. It did. It already extended the range and went all the way up to, well, yeah, because we mapped this one out too, remember? Precision. Did it have anything to do with the fair value gap over here? Hell no. It was this guy. Nothing over here was telling you it was going there. That guy. That's precision. Weekly chart. Back in 2019, the algorithm was working. If you could know then what you know now, but things have changed. Now you know it. Once you see it, you can't unsee it, my friends. Pop in every morning on our show, and we'll trade it live for you. Live. And now, if you know this, and you say, I've traded above it, it's changed directions on me, and I'm looking for this now to go long for up here, for the next 1, 2, 3, 4, 5, 6 weeks, or the next month, I'm expecting upside. There's an imbalance right here. I'm expecting upside for the next 3 weeks, 4 weeks. With that change, if you had a weekly bias that was 4 weeks out, 4 weeks out, and you're always on your bias going up, and you get in on a 4-hour chart for that long, you'll find right there, if you go back into that 4-hour chart in there, you'll find the reversal. It came down, it broke above here, came back, found support at that to confirm that you're going higher. And now you say, now I'm in this for a long. If that breaks that high today, in a daily chart, if it breaks that high, I'm out. I'm now going to get back in sync with the market to go higher. And then you'll catch 4 weeks of upside. Based on, I'm trading a weekly chart, but I'm executing on a 4-hour, which is like a 1-minute chart for the daily people to go long. You have a bias now for 4 weeks, right? So when you start to see this reversal, you go, shit, man, I can catch this. If I catch this, if it trades through that on a daily level and closes, I'm looking for this guy to go low. I'm looking for a run back into this range, back down to my discount box. Oh, you got one here and then one here. 50% of my range, whatever. Use your fib tool on the way down. Every day you hit a new level, like 62%, pay yourself again and move your stop loss to the previous 2 days ago when it hit 50%. Then 70%, so on and so forth. Use your fib tool on the way down again. And look at that, right to the box. Again. Now you go, sweet, man. If I get a kickoff there, I'm looking for a day, a Monday or Tuesday for this wick to form in here, right? See, when you're looking at this weekly candle, now you go, oh, this would be sweet if this was a Thursday, Friday wick. And we have 25 Michael's Friday, or TGIF Friday. If I get a TGIF Friday, come down and give me half that wick, I'm going to go long again. I want to get back into this range, and I want to take out that premium array. Now that I've keyed off of a discount, if I can get back above that candle on a close, ooh, I'm running all the way back up to premium array up here, whatever. Does that make sense? Yeah, somebody had to manage this by hand, right? Anyway, this Monster Energy drink, I thought it was kind of nice because it's Monster Energy drink on a monthly level was like crazy. Look at that. Monster Energy drink. Right back in 2007. Buying at 46 cents. Buy 1,000 shares or 100,000 shares at 46 cents. It cost you 4,000 bucks. 100,000 shares now. Ugh. And I don't know if that's split. Oh, it did. Look at how many times it split. 2 to 1, 4 to 1. So now you've got 2,000 shares. Now you have 800,000 shares. Now you've got 1.6 million shares. Now you've got another split of 5 million shares at $57 a share. So you look hundreds of millions of dollars, like 1 point something billion dollars or something like that. I don't know what that it works out to, but you know, having almost 6 million shares, $300 million right there. 6 million shares times 50 bucks, $300 million from a $4,000 investment. Boy, could you have made things different in your life, hey? With a $4,000 investment, taking your life savings. I'm going to go to school. No, I think I'm going to invest in Monster Energy drinks. I'm not going to go to university. Come see me in 2025, in 20 years. At your class reunion. What did you do? I spent my my graduation or my college fees on an investment. Crazy. Anyway, I'm just playing. It's gold, Mags. I tell you, it's a beautiful thing. Pick any stock. Like this is I did this with Tesla one day. I think I took Tesla and I just practiced with Tesla. Let's look at Tesla here. Not that anybody is buying Tesla. But if you took Tesla back in 2019, and this isn't counting all the splits, this 5 to 1 split, it's kind of crazy shit here. When Tesla was 20 bucks. I think I took this like $10,000 and turned it into $157 million just using this principle. Obviously in demo money, but see how we got the reversal? Tap it, $45. You buy 1,000 shares, so you put $4,600 into this thing, and off it goes. And we're just waiting for our first reversal, okay? Just waiting for a first reversal. We buy here in 2020 at 46 bucks. It splits. Now suddenly we're worth 5 times more than we were before. So now we have 5,000 shares. And we're waiting for our first reversal. Okay? Waiting for our first reversal. Waiting for our first reversal. Waiting. Here. Trades below it. Right there. You go, ooh, as soon as it comes back and taps that, I'm out of Tesla at $241 times 5 times. So 241 times 5,000. So 5,000 times $240. Work it out. It's like $1 million or something like that. And we've just finished a year. You've made $1 million your first year. Just from there to there. Okay? And you go, I'm going to short that. I'm going to short Tesla because I'm using my principles specifically to my chart. And I said, as long as I'm in the premium, I'm going to sell it at a discount. So here, that was my reversal. I traded below it. I came back into it. I sold my stock short or sold my stock and then I went short. Do you trust yourself to do that? This is where you have to trade in ones and zeros and get all your emotional shit out of the way. Now you say, I'm going to go short. You short Tesla from 239 all the way down to 50%. You pay yourself. Move your stop loss to break even. Then it hits 62%. You pay yourself again. Move your stop loss to 50. Then all of a sudden it goes and stops right there and you go, didn't quite get 70. Then it, it came down to, went up to there. Now, so we're coming down to here. Hit 50, we're at break even, right there, break even. So we're still good, Then it finally comes back. So you would have got 50% from there to there. So you can say, if it breaks above this level right here, I am going to go long. So until it does that, or until I see a reversal, this is my level. And I'm just playing with you guys because I got some time and my wife hasn't told me to come out playing just yet. So I'm looking for that level, or until I see a reversal. Or if you really want a precise one, I'll give you this one right here. Okay. So here's your reversal. There's the first one. Tap it. Stop loss is sitting right here at 183 bucks. Now you've bought your $1 million worth of Tesla again. You just said, I'm doubling down, man. Okay, I'm putting everything. I'll take my $4,000 out, my $4,500 originally invested. I'll take that out plus 500 bucks so I can go out for dinner with my girl. And I'm going to put the rest on there. Yeehaw! I'm going to throw $1 million on there. I'm going to do it. Yeehaw! You throw it all on, you invest right here. You put your stop loss down here. You said, I'm willing to take 2% of my losses right here. I'll take $200,000. I'll take 10%. I don't care. I'm going to take 10% off. I'm going to throw the whole works in there. If it drops below there, I'll close out my trade and I'll just move to the sidelines. Right? So it goes up there, it runs above, you go, yeehaw. I just want to see that take off now. And it takes off. You go, if that runs above that high, I'm going to chuckle to myself. Because, you know, you like to talk like a very rich Southerner. Yeehaw, it finally runs above there. You go, hot diggity dang, because that's what you'd say to yourself. Hot diggity dang, it closed above my high. I'm going to pay myself again. So you pay yourself from $195, you're up to $265. And you go, oh, look, I don't have a reversal yet. I don't have a reversal yet. I don't have a reversal yet. Hot damn, here's my reversal. If it comes back in there, I'm going to get short there. I'm going to close my trade out at $380 on a reversal right back into here. So I'm getting the rule is I'm getting out. I'm getting out. So you get out of your trade. So you get in right there at precision and you get out right there at precision or right there. I don't care. $379. You bought it at $195. So you like doubled your profits. So now you make $2 million. You're like, God damn, I'm going to take out my other $4,000. Now I'm up $6,000. I'm going to put my whole $2 million back in there again. Yeah, I'm going to go short. What the hell? You're going to go short from here to here, take 50%. I'm going to pay myself on the way down. And then as soon as I see myself a reversal, I'm going to take it long. You don't get it here. You don't get it here. You go, that's okay. We're above the premium. I'll wait for a reversal. Trades below it. Come back inside it. Now I'm going short. Yeehaw. I'm going to take out that low. Takes out the low. Range extension. Hot diggity damn. I'm going to pay myself. I'm going to go long in here. Take 50%. As long as I'm above 50%, pay myself. Reverses. Comes back inside here. Stop loss almost got hit. Oh, look, I paid myself all the way down. All the way back here. Do the same thing. All over again. Look at this. We're rewriting markets over here. We're playing Tesla stock. Who said we couldn't do this? Hot damn. Does this stuff work? You say to yourself. It's all down close candles. So you got to use that. It goes up. Gives you a tap. Look at this range. Pay yourself on the way up. Mean threshold. Yeehaw. Comes down. Gives you another opportunity to get long. We got another reversal right here. Taps it perfectly on the way up. Looks for our premium level. Hits it. Hot damn. Now we got so much money. We're putting our parents in 5-star resorts. We're helping homeless people. We're building shelters. We're feeding we're feeding the poor people. We're doing some amazing things with people because we've made millions of dollars. And we only started buying Tesla back in 2020 there. 3 years later, we've made millions of dollars trading both sides of the market. And we're like, hot damn, let's keep doubling down, man. I take my original $4,000 out and I'm going to do again. My personal wealth's up to $12,000, but I got millions of dollars sitting in Tesla because I believe in Tesla. You don't have to believe in Tesla. You just trade it. Every week you're coming in and you're buying something new. So here's our where's our last little big plunge in Tesla. Let's have a look at what we're doing. Oh, look right there. So we have nothing right here. And we go, oh, Tesla's sitting right here. Oh, baby. If we could just get above that level and come back and give it a kiss. Oh, take me to the prom, baby. Look at that. Take me to the prom. Pay myself up there. You bought your stock at 180. You sold it again, a big chunk of it at 3. And you say, if it closes above that, oh, hot damn. I'm looking for range extension. If that comes back down inside my range again and my premium, I'm going to get long. Yeehaw! We'll catch another long. And look at that. Just one more time. I'll come back here. I think I'll load up one more time. Woohoo! And you just caught Tesla on the way up. And you say, I just caught me, look, at $400. Oh, do we have a split? Was there a split in here somewhere? No. We have another reversal. You go, hot diggity dang. If it closes below this level, I'm out. It closes below. I'll get out of Tesla. I bought it down here. I sold it up here. Now I'm looking for a reversal. If it trades back into that level, my stop loss is sitting up here. I'm going short. I'm shorting Tesla. I don't care all the bad news they're saying about Tesla. Even if they say, well, this one closes right here, opens. If it comes back and gives that a kiss, I'm going to get short right there. Oh, I'm going to get Tesla now, short. I'm trading myself down into here. Oh, look at the discount array, premium to discount. I did some boxing inside Tesla, and it's 2025. I've got so much money. So many people are fed. I've got homeless people living in 5-star luxury. I'm building homes. I'm curing cancer. Meanwhile, Tesla dude is building dick rockets and sending them off into space. What do y'all think about that? That's what you do with Tesla stock. That's what you do with Tesla stock, my friends. Yeah, baby. That was fun. Thanks for indulging me in my little, that's a weekly chart. See, we've gone from every asset, a whole bunch of different asset classes, a whole bunch of different time frames. I'm not giving you guys anything that you can't reproduce on any asset class, any time frame, any day of the week. Fun, huh? And I only did it with half a face. I did it with half a face. I was only half into this today. I'm sorry. That's my split personality. Half of me is undecided. The other half is really excited. Not quite sure about this. I'm split. I've got a split personality. Come on, give me another one. My wife hasn't yelled at me yet. Oh, wait, I have to go take my steroid. Hang on, I'll be right back. We're making millions, honey. We're selling Tesla. We're making lots of money. Well, 9 of you stuck around. I appreciate your time. If there's anything else you want me to look at and test this on, let me know. I'm happy to practice this a little bit more with you guys. But you'll see what we're doing every day now. You see what we're doing every day. So you can see how you can start looking at these things and forecasting where you expect Tesla stock to go. And you can trust and forget all that noise that's out there. That's pure technical analysis. I want you to see that. I want you to see that that was purely technical. I did not, at any point during any of this analysis in Monster Energy drinks or any of this stuff, did I ever say to you guys, let's refer to the fundamentals. Let's refer to the news that happened on that day. Let's refer to a boardroom meeting that old Elon was having with his friends about Tesla stock. Did any of that shit come into play? Absolutely not. Absolutely not. No fundamentals and all the noise and the talking heads that you hear out there had anything to do with pure technical analysis. And precise. That meeting did not end that day on that one precise moment. Elon said, meeting's adjourned. I'm not selling any more stock. We're sending our stock higher, right? Nothing. All that stuff is noise, as far as I'm concerned. Just me. If you're a fundamental person, bless you for going through the rigorous studying of all that stuff. That's amazing that you can do that. None of this had anything to do with any of that fundamental stuff. So it works. That's a weekly. Lots of little jumps back and forth, hey? Look at that. Look at that reverse right there. Change right back into it. Crazy. Crazy. I created a new Telegram ID to just join your group, Darren. It worked. Yay! Mags 007. I love it. There you go. You're in, Mags. Woohoo! Mags said, come on, Dad. Look at this guy's show. No, I don't want to go to bed just yet. Just watch. This guy knows what he's doing. Just watch for a few minutes and then just take off the parental controls. And he's like, all right, Mags, you can have it. You can go. All right. So what do we got next? Forex. How many guys in here are into Forex? It's Forex. So you always take American dollar. So let's take this US dollar index. Does it happen to US dollar index as well? Do indices play an important role? Reversal shows you that it's changing direction. You get short right off of here. You're inside this range. There's your discount. You trade through it. What do we say when we have a discount array traded through? We said, if we trade through it, we're looking for range extension. We trade through it. We come back into it. And what do we get? We get range extension. We have a reversal. Are you guys getting excited yet? Are you getting excited yet? Look at this. Above. Into it. Stop losses here. Running all the way back up. Premium array, discount array, box-to-box trading. Reverse. All the way back through our box. Trade into it. Inside this range. Premium range right there. Little premium box. Tap. Roll over. Drop all the way down. Look at this guy right here. You got to be real careful. Real careful with these levels there now. They're above you. And they're right here. Body does not get above it. Comes back inside, taps it, changes direction. Right here. Look at this. Look at this. Look at this. Right to here. There to there. Body trades below it right here. Come back in, give it a kiss. Away you go. You're running for lower, extending the range. Where's our discount array? Way down here. Right there. You hit it. Run through it. Now you say, okay, now if I trade through it, I'm looking for a range extension. You trade through it on a close right here. You open on it and come back and tap it. Then you went range extension all the way through it. Now you're looking for, do we break back above this level and start going higher? So you're above it. Now you're below it again. So now you got that one of those, you have to wait for market structure to shift because we can be doing back and forth here. And it's in a bear flag. Now this could be really scary. Now when you look at this, because if this is the next price leg lower, what's down here? A run on the liquidity, original liquidity, the original consolidation. When the market maker buy model began, we had original consolidation, market maker buy model. Then we switch into a market maker shift into a first level or smart money reversal, low risk sell. First level of accumulation is into here. Second stage accumulation is here. This is a unicorn trade right here. That's unicorn all the way back down. Now we're looking for another stage of distribution here for take out the original consolidation. That would be the one that would do it right there, if that's the next price leg lower. So what would that do for all the rest of the markets? What would that do for the rest of the markets? Because now we're in a market maker sell model, obviously. We're coming back into this order block. I like that. And the support here. I want to see that can keep coming lower now. And you're looking for all the other markets to start getting bullish, right? So if you're British pound, what would put us at bullish? You know, they're just running side to side. Oh, let's look at this on a daily level because that was on a daily. So if that's bullish, look at the bull flag. Retail's loving this for a bull flag, right? Institutional order flow entry drill. Remember I was telling you, as soon as we break an old high, we get that fair value gap and that graded response. Look at that. Look at that. I've given you multiple examples today in this show about this graded response. When you get a high taken and a fair value gap like that, oh my God, you guys. It is what you're looking for. Your A plus, your A setup is a nice little tap right there and then go. Mean threshold. Pay yourself at the mean threshold. People keep saying, well, you're aiming for up here now. No, it was too many PD arrays away, man. That could just reverse on you and come back down. You go, I was wrong. Well, yeah, you missed an opportunity to pay yourself at the mean threshold of the highest up close candle. It's the frickin' breaker. Last candle takes out these lows. These three here take out that low. It's the breaker. I use the last candle. I use the mean threshold of the last candle. Pay yourself. It's days. You would have been on that for days and finally hit it. And you say, no, move to the sidelines and wait. I'm in a consolidation. I want to see a market maker shift above this, and this turn into a CAM 1 model for a long. I need to do this without the right side of the chart. There's a way to do in trading view, then start revealing the candles one at a time. Yeah, do it like this. Just pull it over like that. Start trading from here like we were doing, and then just go here and go one candle. Click. What's my next decision? Trade back to that candle. I want to see it run back up into that box right there. Next candle. Next candle. Next day. Next day. Objective hit. Done. I just got paid from there to there. And then what I used to do is go, if I was going to put $1,000 on that high right there, and I was just going to go to that level, how much would that have paid me? That's what I used to do. And I go, if we can get above that, I'd like to see that run back higher as soon as we can get above this level and that guy right there. Then you go, click. Oh, look, it closed above. Click. Oh, if it comes back in, I'm getting that for a long. I don't want to see it close. I don't want to see it close this in. 75% graded response again. I don't want to see it close that whole thing in. I want to see it to start to leave now. Oh, closed it in. I'm out. It would have taken me out right there. I would have been out of the trade, so I'd wait for the next one to close above that level right there. On a close, and then go higher. Trades above it, come back inside it. Now you can go higher. And you've hit your premium array. So that's how you do it. Just kind of just click it one at a time. Or you can go to that market replay. They got this market replay thing here. I think you go like this. And then you can just go play. But it's doing the same thing. You just get to move your chart over a bit more and give you some more room. So you can box this out here like this. And you can say, all right, so if this is my premium array now, right there, and this is my discount, I'm looking for this guy back here. I'm looking for 50% of my range. Go like this, go into here, and you say, now that I've traded below that level, if I can get into here, I don't want to get short. I'm looking for 50%. So play. All right. Yep. So there's that order block. It hit it. First one, 50%. So you hit that order block, hit that, ran through it, came back, found support at it, extend the range. That's why that's important. Anyway, my wife's calling me now, so I'm out of here. That's a great way to practice that. It's actually better than what I was just doing, but you'll have to slow it right down to halftime so you can decide each candle as they happen. Okay. Anyway, that's the end of that market replay thing. You get the idea. Any questions? All right, I'm out of here. It's been awesome fun, 3 hours. Love you guys. I'll see you bright and early tomorrow morning. And it was fun. I had a good time. Like button, subscribe. We're here every day. I'll see you guys tomorrow.